This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr with us as well. Real duty by Barr to be in after Lions-Packers. Jobs Day. What do you think, Paul?
I mean, I've seen the number go up a little bit. Now the consensus is 220,000. We're optimistic. Tom, we were at like 200,000 just a few days ago. Consensus is now 220,000. There you go.
You see in the market, we got a real pause. You look at the blinky of the Bloomberg screen. Not so much right now. It's 700. Say good morning to you on the commute across America. Of course, when you get to the office, when you're in your home, YouTube, sign up. I've been a bad boy this week about getting out on live chat on YouTube.
All right,
we're going
we'll take care
to fix that today. Sweeney and I, we're getting ready for a very busy day. We're going to go to Steve Carroll on the really emotional opening of Notre Dame. We're going to see that
is cool.
Saturday and Sunday. Mr. Trump and Mrs. Trump, I believe, in attendance. Dr. Joe Biden will be there. The president resting after that long trip to Africa. But I'm sorry, we're going to stop the show. We're distracted. 6 Super Bowl champions, and you go to UNC? Is that what we're talking about?
Mr. Belichick, I heard he's talking to the folks at UNC. There's a head coaching vacancy there. I don't know. I mean, Chapel Hill, why not?
Wow. What an experience
love to have him
for
there.
the kids.
Yeah, that'd be phenomenal.
Belichick on the sideline. We'll have to see. Right now, futures finally a pullback. We've plunged. Is it a correction?
Yeah, exactly. Down S&P down 6 points, Tom.
Down 7. The VIX still under 14, 13.63. Bloomberg surveillance on this jobs day. We're brought to you by BNY. BNY's expertise, their insights can help clients achieve their ambitions. Visit BNY.com. From the Interactive Broker Studios, let's get started. Our Bloomberg Business Flash. Lisa Mateo.
You got it. Traders looks like they're in this kind of wait-and-see approach. This is before today's jobs report. The data is going to have a big say on whether the S&P 500 can build on its 27% rally in 2024. The benchmark actually on track for the best year since 2019. So let's start with S&P futures, down about 0.1% or 6 points. We have Dow futures down 39 points, NASDAQ futures down 13. We have the 2-year yield 4.16%. That's up 2 basis points. The yield on the 10-year 4.18%, and that is little change. The CAC in Paris, have to point it out, right now it's up more than 1%, and this is after national rally leader Marine Le Pen told Bloomberg News a budget could be delivered within weeks. The euro right now, little change. That's against the dollar. The Bloomberg Dollar Spot Index is little changed as well. South Korea, another focal point, the Korean won. That's what we want to point out. That right now is down about 0.3%. That's after the nation's Army Special Forces commander said there will be no second martial law. The Kospi down about 0.5%. Bitcoin pulling back from the record high set above 103,000. It's right now at 98,000.
Wow, I didn't
yes,
see that.
A little bit of a pullback there.
All right.
And we have an earnings beat. Hewlett-Packard Enterprises, thanks to a jump in sales of servers to power artificial intelligence computing, those shares up more than 1%. And you got to get those pricey Lululemon leggings here. They're up 9%.
But
the
you don't do that.
Boosted, I do not.
No, neither
Boosted
does Alex
the
Steele.
full-year outlook. Also, overseas sales offset that softness in the U.S. And then earlier than normal discounts, increased competition from places like Sephora, Walmart, Target, Amazon didn't really impact Ulta Beauty as much as investors thought. The company reported better than expected results, raised the lower end of its full-year outlook for the remainder of the year. Its shares up 11%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We're going to get to Gennady Goldberg here to start on rate strategy in this jobs day. Again, 8:30, we'll go beneath the headline data. But right now, a tour de force for Bloomberg News the last 2 or 3 days. Steve Carroll, still with us. Stephen Carroll, of course, leading all of our radio coverage out of London on YouTube as well. Thrilled that Stephen Carroll could brief us on this weekend. Stephen Carroll, President Macron will give a speech, a huge victory lap within the absolute catastrophe of government and politics in France. And then the Archbishop of Paris will knock on the door of Notre Dame. It will be emotional, won't it?
It will be emotional. It will be significant, not just for the 50 heads of state and government who are going to be attended, including Donald Trump, as you're going to mention, but also for the city of Paris. This is a part of the skyline that's been missing since 2019. Everyone remembers where they were when they heard the news or saw the smoke, as so many did. Neighbours of the area had to have buildings closed because of fears of asbestos spreading apart, all around this extremely beautiful area of central Paris. We've all gotten used to looking at the hoardings around the cathedral for the past 5 years. So you're talking about a moment where that area of the centre of Paris is being transformed, renewed. I don't know if you've seen the pictures of inside the cathedral, but it is really spectacular what they've done. Our colleagues on City Lab have written about it, and there are great pictures on the Bloomberg website as well.
So, Stephen, where are we in the restoration of the cathedral? Is it complete, or are we still a work in progress? Because some of the pictures I've seen are really extraordinary. I never thought they'd be able to get to this point in such a short period of time.
I mean, I think the thing that struck me about it is how much it doesn't look like it did before, because essentially during the restoration works they've been able to take down so many of the elements and clean them. I mean, 8,000 pipes in the organ taken down, cleaned, restored and put back in place. And I mean, Paris, like cities all around the world, have air pollution issues, and this has coloured the stone, it's coloured the tiles. You remember the long queues of people that go in and out of that cathedral every day. It's bright. It shines in parts. That's what people will be striking when we see the images from inside.
Stephen Carroll, not to be funny, what does Mr. Macron do Monday morning? I mean, after the emotion and drama of this weekend, what does Mr. Macron wake up to Monday?
Well, actually, the question we're asking now is whether or not Mr. Macron will have a right-hand man, will have a prime minister by Monday as well, because that's still what we're waiting for after this week's no confidence vote. He said in his address to the nation last night that he would name a new prime minister in the coming days. He's holding a range of meetings with political parties at the Elysee Palace today. So, I mean, he may wake up to say that there's a plan, things are back on track. We can be sure this is going to be a spectacular weekend where the eyes of the world will be on Paris. He'll be in his element, doing the glad handing of international leaders that we know he enjoys and does well. So the question will be whether the domestic political situation will look any brighter on Monday morning once they've gotten over this weekend of ceremony.
Stephen Carroll, folks, his people called me up last. They said, you're not selling Stephen good enough. Folks, across continental Europe,
solid.
They start Bloomberg Daybreak with the acclaimed Stephen Carroll in London, and they generate a podcast literally within 30 minutes. The numbers, Paul, it's Macron listens to it. It's unbelievable. Stephen Carroll, thank you so much.
And he says in his phone on the Bloomberg terminal, he's fluent in English. I'll give him that.
Yeah,
that sounds pretty good.
Unlike me.
And he's fluent in French, so that's good.
Unlike me.
And then in Irish, he's advanced.
He's advanced, unlike me.
Who's advanced in Irish?
Stephen Carroll, safe travels on the Eurostar back to London. We need to dive into the markets here and the impact off this 8:30 report. We've got the right guy on, full faith and credit, don't we, Paul?
Yeah, Gennady Goldberg. He is head of U.S. rates strategy at TD Securities. Gennady, what is our... I mean, we're going to get a jobs number today. You're going to look at it closely. The market's going to look at it closely at 8:30 Wall Street time. The Federal Reserve is going to look at it closely. Assuming we get something in line with the 220,000 consensus, how does the Fed react to that, do you think?
Not obviously, unfortunately. I mean, they've kind of left it up to the last minute here. Market's pricing in about a 70% chance of a cut. I think they'll view it as a very noisy number. They're going to dig into the details. They're going to look at the 3-month trend. I think that's a very important number. There's been a lot of noise because of the hurricanes and the job strikes. There's going to be a rebound this time. We are expecting a stronger than expected 270 on our end. But a rise in the unemployment rate at the same time to 4.2. Just a small tick higher. And that should temper some of that market reaction.
All right. So, I mean, in reality, a lot of folks are saying, I guess the Fed will go 25 basis points in December, but then what? Because the data would suggest they really don't need to do much after that, perhaps. How do you think they're going to react in 2025?
Yeah, I think it'll be kind of almost a hawkish 25 basis point rate cut. We do expect them to cut in December. I think by the time we get to January, they're going to want to go hands off. The data's been solid enough. We actually expect them to hold all of H1 of 2025
Really? Okay.
because they're going to have to see the impact of the Trump tariffs at the same time. And it's going to let them try to figure things out as it comes.
I mean, inside baseball, Gennady, Paul and I are sitting here, and this is the time of the year where we do our vacations. Basically, Paul takes all the summer off.
Yep.
His summer begins in April with the Eagles in Las Vegas at the Sphere. Which Fed meeting matters, Gennady? January 31, March 20, May 1? Can I get to June 12 before there's any fireworks?
I think you could probably get to around June. The debate we're having, and even internally, is when does
June
the Fed
18th.
restart rate cuts, right? Is it in the July meeting as we expect? Can it be as late as September? It's certainly possible.
Wow.
What we don't know is when the impact of Trump's policies will actually start to really filter through into the data. It could be a little bit slower. It really depends on how fast
So
they
how
strike.
are you writing a year-end report? I mean, are you writing like a 4-page year-end report? You and McCormick line it up. Here's the dollar. Here's the bond. Leave us alone.
Yeah, very cautiously, I would say. We kind of try to lay out some of the broad themes, which I think are unchanged, especially Donald Trump's policies. Now you have to consider Donald Trump's policies as an overlay to that and really start to move things around. I think a lot of investors realize next year is going to be a pretty wild one. It's going to be hard to just kind of set a position and walk away. It's going to be a very tactical year.
10-year Treasury, we're sitting here at 4.18%. 6 months from now, are we lower than 4.18% with this Fed Reserve?
I think just marginally.
Just
we've got
okay.
rates basically hovering between 4 and 4.5% in the first half of next year. I think by the second half, once we expect the Fed to actually restart rate cuts, you'll see rates move gradually lower. But even by the end of the year, we're penciling in about a 3.8% yield on the 10-year.
I got to get some excitement here on a frigid Friday in New York. Does the real yield slice down to 1.00%? Can it really squeeze in?
I think maybe by 2026. I think it's going to take some time for that to happen. I think the real rates are extremely attractive. A lot of clients have been looking at those. But I do think we're going to have to wait a little while for real rates to move that much lower.
So what do you think what's the message we're going to hear from the Fed in a couple of weeks here? Is it they've got everything under control, we're focusing on labor, we still think inflation's sticky? What do you think the message will be?
I think it'll be similar to what we've had over the last, I wouldn't say month and a half or so. The labor market's okay. It is gradually moderating, but we're keeping a close eye on that. Inflation is relatively okay. It's a little bit firmer than we'd like. But we are in no rush. And they've been flagging this no rush for a while. I think it's them laying the groundwork for a pause or a skip or however they want to put it. And unfortunately, it's one meeting at a time. It's every data point at a time. It's going to be an extremely excruciating year if this continues.
Have your people talk to our people. I would kill. Lisa Mateo needs a break to go get a gluten-free breakfast. Jeez. I would kill to have you and McCormick together in studio.
Let's do it.
I'm only doing this to get Leafs tickets, but
exactly.
I would kill to have you and Mark McCormick in studio together next year sometime.
We'd love to.
Gennady, thank you so much. Gennady Goldberg with his head of rate strategy, TD Securities, a Toronto Dominion Bank in Toronto. Futures at -5 right now. The VIX 13.60. The quiescence, the bid to the market here has been extraordinary. And given a jobs day, right now the Calvasina index, the Russell 2000, I've got it actually green on the screen there, fractional. Bid dog, I don't know what to make of it. It was 104,000. And then we cratered. Exactly. It was a 10-minute correction. But we're back to 98,000.
Yeah. I don't know.
4 months ago, 98,000 was like a drinking song. You're kidding me.
I know. It's amazing. There you go. Risk on, Tom. That's what the world is telling us.
Oil 67.62. This is Jobs Day. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, and U.S. Treasuries and more on your timetable. Learn more at ibkr.com/around-the-clock. All right, there's a little bit of a cautious tone over markets this morning before today's key jobs report. Could provide traders some clues on the Federal Reserve's policy path. That comes out 8:30 Wall Street time, followed by a read on sentiment at 10 a.m. We head over to futures. NASDAQ futures down about 3 points. Dow futures little change, down 34. S&P futures down about 4. We have the 2-year yield 4.16%. That's up 1 basis point. The yield on the 10-year 4.18%, and that is little change. We have Brent crude down more than 1% at $71 a barrel. WTI crude $67 a barrel. We have spot gold higher at $2,639 an ounce. The Bloomberg Dollar Spot Index right now is little changed. Few companies making news. Boeing, a federal judge rejected its plea deal that was looking to let the company avoid criminal prosecution over 2 fatal 737 MAX crashes. And then Reuters also reporting that Boeing plans to restart producing 737 MAX airplanes this month after that machinist strike. Eli Lilly fattening up its factories. Demand for its weight loss drug Zepbound Mounjaro continues to soar. The company spending another $3 billion to build out that Wisconsin facility that's adding 2,000 construction jobs and 750 permanent jobs. And finally, the world's richest man, now America's biggest political donor. Elon Musk poured at least $274 million into political groups in 2024. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. You okay over there?
Awesome.
You know,
Fantastic.
it's like we're settling. It's cold here, folks. For those of you
finally got a little
across
chilly
the
here.
nation.
Yeah.
I looked for snow last night, Lions Packers, and
No.
Mrs. Keene had to remind me it's a dome stadium.
Oh, it's a dome. They took
Like,
care of that.
okay.
Yeah, no more.
They do play the Bills here coming up. I
Yeah.
don't know where they play, if it's in Detroit, but it'd be fun to see a snowball again.
God, they'd be getting crushed up in upstate New York with that lake effect snow.
The
as they
lake
call
effect
it.
is snow.
Yeah. Oh, my goodness. In December. It happens in December. I heard from Rob Caroline years ago. He explained it to us, which is the water's still relatively warm in Lake Erie.
Yes.
So when the cold wind comes across, boom, there you go. And that's what you get in December over there.
Yeah, the game's in Detroit, so we'll have to see.
Okay.
But I have to admit that you shovel the ice rink in your backyard in December.
Okay.
The lake effect snow's really heavy. It's got a lot of water in it.
Yep.
By February, you just give up. You know, you just sit inside and watch Get Smart reruns. And
Right, exactly.
go, yeah, okay, we'll do that in April when the snow thaws. She was a hit the last time she was on with this huge response to Jennifer Lee. She's the BMO Capital Markets, really tour de force research up there. She joins us on this jobs day as well. Jennifer Lee, what is the distinction of this jobs report at 8:30?
Good morning, and thank you very much for having me on. It's going to be, as your previous guest said, a very noisy report, much like October was like uber noisy because of all the strikes and all the weather and all that. You know, we're expecting a rebound of about 180,000 in November, but we have to sort of take it with a grain of salt because there will also be the noise of the rebound. So It's important to look at the overall trend and see, you know, where things are going and look for revisions as we always do. But I think it's going to be, you know, pretty clear that, you know, job growth has slowed as the months have gone as months have gone by. More importantly, look at the jobless rates, you know, see whether or not we're going to get that uptick. You know, I think we are, you know, consensus is looking for an uptick. But I always look at the Conference Board's survey of the last couple of months. You know, there have been more people saying that jobs are more plentiful, and fewer of them are saying that jobs are harder to come by. So I'm sort of waiting for that to sort of filter through potentially into the jobless rate. We'll see. It doesn't go hand in hand, but I'm always curious to see whether or not that's going to show through.
Is it inside baseball to take a 3-month moving average? Right now I got 78,000, 223,000, big report in September, and 12,000, that miserable report last time around. Is it okay to take a 3-month moving average of non-farm payrolls?
If you look at 3 months or 6 months or any kind of, you know, X number of months, you know, like the 3 months is going to be about 138,000. This is assuming no revisions, which is not going to happen. But again, it's just looking at the overall trend, and you're going to see it slowing as the year has progressed.
So, Jennifer, next month we're going to get a new administration coming in the U.S. We've got a kind of a slight Republican control of both houses of Congress. How How are you factoring that into your economic outlook for the United States? Are you making any changes? Have you made any changes?
So we have actually been adjusting our growth forecast generally higher over the course of the past year. We've got roughly 2.7% growth factor in for 2024. And for next year, we've got, just about 2.5%-ish or so. But since the election, we did bump up our growth forecast just because of the expected stimulus that's going to be coming through from the new administration. We lowered the jobless rate a little bit, left inflation unchanged because we have really not a lot of clarity on how that's going to play out. We do believe tariffs are going to be inflationary, but then there's going to be the impact of the stronger dollar and whether or not there's going to be retaliation. So we're kind of leaving that unchanged for now, but for sure we are looking for stronger growth.
So you're writing your outlook you've already done it, I know, but your outlook into next year, when you work through the just simple GDP equation, consumption, 70% of the economy, investment, government, and the whole net export dynamic, where's the Jennifer Lee surprise in that algebra?
I'm going to be curious as to see where the exports, the net trade figures, how they factor in. Again, because if we are going to be tariffing, and I don't know if that's a word, by the way, if we're going to be tariffing across the board, 10%, maybe 20% tariff on all imports coming into the U.S., a lot more if they are coming from China, potential 25% on Mexico and Canada, and how that's going to impact trade, whether or not all the other trading partners are going to be like, okay, we will buy more, no problem, or there's going to be retaliation. So that's, I think, where the big question mark is going to be. But if we're going to see expected tax cuts, from on the corporate side, we can anticipate stronger business investment. If we anticipate fewer taxes to be paid on Social Security, tips, overtime, all those things that President-elect Trump has mentioned, we could see stronger consumer confidence and consumer spending playing out. But of course, all of that can be offset by higher prices. So huge question marks, a lot of question marks out there.
You heard it here first. OED, tariffing. It's a gerund or present participle of tariff.
I like it.
Used exclusively by Jennifer Lee at BMO Capital Markets.
She coined
there it is, tariffing. We learned something new today, folks.
Every day.
Jen, thank you so much. Jennifer Lee on Jobs Day is becoming a real staple for us. She has to put up with Belsky.
Oh, yeah?
Did you see a photo this weekend?
No.
Belsky and Dan Ives are down. Why? They're smarter than we are.
Where are they?
Paul, Tom, freezing.
Yes.
Ives, Belsky, Florida, and it looks
Perfect.
like Turks and Caicos.
I know. That's where
they got it figured out.
Exactly. We need to talk to somebody about this. About doing a little
I'm
remote
down
in
spring
Palm
training.
Beach. We'll do that spring training. I like that idea.
Yeah, it's go down and
talk to Bob on that.
Do that. Red and green on the screen right now. Nasdaq just turning green here. It's a market that just doesn't want to go down. 13.56 on the VIX. To frame out the jobs report again, there are two reports. This is critical. There's non-farm payrolls, which is what Jennifer Lee was talking about, and then there's a household survey as well. And, we sort of mold them in together, and you see the market reaction at 8:30. But as you mentioned, Paul, at the start of the show, there's a little more optimism here about this report. I mean, we're not going into this thing gloomy. You combine it with GDP, and it's a solid America.
It's a solid America. Again, Tom, the headline number, 220,000 change in non-farm payrolls here. The other thing we look at is the average hourly earnings. Are we getting paid more? And right now, the annualized number looks for November 3.9%, a little bit less than last month of 4%, but still solid and above the rate of inflation. So, real wages for most Americans, and it's been this way for 18, 20 months, are positive. Your wages are going higher than the rate of inflation, although we are don't feel it when we go to the supermarket, but that's kind of what the numbers suggest.
Great lineup coming up here. Stephanie Roth just slotting in Wolfe Research. We'll do that after the jobs report. That'll be nice. Perfect. I mentioned Lori Calvasina. She will join us. Getting her people are really difficult.
I know. Well,
Lori Calvasina, expert on mid-cap and small cap. Do you have the courage to make the shift out of NVIDIA?
Lori Calvasina lived on the lawn at University of Virginia. That is big. I'm talking a small percentage of seniors are allowed to live on the lawn.
Yeah, she had the case of Stroh's outside her.
Exactly.
They got a little 18th century dorm door as well. Katie Kaminsky will be with us here in a bit. This is Bloomberg Surveillance. It's Jobs Day.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we got futures, little movement right now. This is ahead of today's U.S. labor market figures. Now, economists expect the data will show a rebound in hiring November from the effects of recent hurricanes. Also, a major strike. Estimates suggest 220,000 jobs were added. Swap trading showed the odds of a quarter-point rate cut by the Fed at its December meeting are a little below 70%. We get to NASDAQ futures. Right now, switching up about 8 points. We have Dow futures, though, still down about 24 points. S&P futures down about 2. We have the 2-year yield 4.16%. That's up 1 basis point. The yield on the 10-year 4.18%, and that is little change. The Bloomberg Dollar Spot Index is little change. We have the Korean won down 0.2%. Japanese yen down 0.2%. We have the euro little change. The British pound is stronger right now. Bitcoin, well, down about 0.8%, around 98,000. We have shares of Petco on the rise, up 10%. Reported third quarter adjusted EBITDA came in ahead of estimates. And then DocuSign, you know that company, it's up more than 12%, boosted its revenue forecast for the full year. And then we have some deal-making news. Aviva reached a deal to buy Direct Line Insurance Group. It's a sweetened offer that valued at £3.6 billion. We have shares of Direct Line. They're up about 7% in London. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. The new J.P. Morgan building that's going up on Park Avenue, it's really spectacular. Yeah, it's 14,000 employees scheduled to be there. Priya Misra, 12 months ago, when she darkened the door, it was going to suggest that she's going to have a view of like a brick wall, looking out on an alley over to Madison Avenue. She's had such a year with her team at Core Bond Plus that she's rocking. She's got the view, and it could be she can see Pennsylvania, but maybe she's got the Central Park thing going if she could close out strong. 85th percentile, sharp ratio against her peers on the Bloomberg, just killing it. Priya Misra with Core Plus Bond. Forget about the Fed talk and Jobs Day. How have you developed a 200 basis point pop over the index?
Thank you, Tom, and thanks for highlighting that. It's hard for me to talk about how performance has been.
We just want lunch, off the terrace, off your view at the new building. How did you do this? How are you doing this?
Sure, that is our focus, to try and outperform the ag. And how we do this is a combination of top-down and bottom-up. So top-down, thinking about duration. Now, you might say the 10-year was exactly at this level a year ago. But in that year, we've gone from 4.7 to 3.7. So trying to navigate the interest rate move, even if the 10-year doesn't move, it will move through the year. So that's part of it. And then the bottom up, I give a lot of credit to our research, our trading team, the PM team, that'll try and do, a bottom-up security selection, sector selection. And I would say we're in a soft landing. So we have to give credit to the fact that, and I would give the credit to the Fed that I think stopped hiking when they did. They started to cut rates before the unemployment rate rose too much. So I will say policy support helped, and that's why we've been in a soft landing. So depending on which sector you're in, if you are long risk assets in a bond fund, credit spreads, we still think there's value in it. So owning credit spreads, being able to navigate durations, particularly because it is a hedge, I think that's what we're focused on.
Bob Michael's got a vector towards lower interest rates. Do you share the same opinion? Or are you going to end up looking at the brick wall over in the alley over to Madison Avenue?
No, I do think the Fed is clear that they're going to cut rates. So yes, lower rates, is it 3.5, 3.75? That would be the 10-year, I would think, as the Fed cuts closer to neutral. Now, we don't know what neutral is. The Fed doesn't know, so they're going to slow down that pace of cuts. So I do think interest rates will fall, but not a whole lot. I think where we see the most value is in spread product. And people talk about spreads are tight. They're tight, but look at all-in yields. You're getting 5.5%, 6% in high-quality spread product. That's attractive. You have income and fixed income and a hedging property. What if the economy does slow down? We know business cycles happen. That's when you'll get that big rate move and that big positive return in fixed income.
This payroll number we're going to get today, I have no idea what it's going to be because we've got hurricanes over the last several months and lots of other issues, strikes and so on and so forth. What are you looking for today on this jobs number?
So even though my blood pressure rises every payroll report, I think this might be a less important payroll report because of exactly your point. You have to average at least 2 months, because we had that 12,000 last month. We know it's
Yeah.
going to be impacted by strike and hurricane. So let's look at the underlying trend. I'll be watching not just the payroll report and making those adjustments, what's happening with revisions. Does the BLS revise last month's number higher? What happens to the unemployment rate? I mean, the Fed's looking at the totality of data, and our sense is that the payroll hiring is slowing. But I want to look at that pace of slowing. So far, it's gradual. It keeps the soft landing alive. But that pace is what I'm watching.
A soft landing, does that mean the Fed maybe cuts later this month and then takes a pause for 1, 2, 3, 4 months? How do you guys think about that?
I do think, given the level of Fed funds at 4.6, I do think it's restrictive, and the Fed believes it's restrictive. So unless, and again, you talk about payroll, I think CPI might be a little more important because we've had these slightly hotter CPI prints. So if you get a really strong CPI print, they could pause. I do think that they cut in December. And then next year, as you get closer to 4, 375, that's when that Fed can pause. But I think it's a cadence rather than that endpoint.
Michael Feroli's up on the top floor with Mr. Diamond. Michael, he doesn't see Central Park, though.
No?
No,
Okay.
he sees Michael Feroli sees, he can wave to Washington.
Oh, yeah.
That's how high up he is in the tower. Feroli had an arch call that potential GDP was under 2%, near 2%ish as well. Have your economics team adjusted that terminal value of the economy, which forces you to adjust in the bond market?
I think on potential growth, you're right that historically in that sub 2%, with immigration numbers running that high, I think potential growth in the last year has been higher.
Yeah, but the president-elect is going to stop that. Is there a tangible linkage between a president-elect's immigration policy and then what we see demographically into nominal GDP?
So demographically, we're heading to a lower number in terms of GDP potential growth. You're right, policy will matter a lot. I mean, I will say the Fed is focused on the labor market and inflation. So the Fed cut rates, and they cut by 50 despite a GDP number closer to 3%. So that almost tells you that GDP matters a little less because we don't know what potential is and we don't know the policies.
Thank you.
It's going to come down to the labor market.
Folks, what you just heard there is my steal of the holiday season. Gee, don't just over agonize. Paul, there's two Americas out there.
Yep.
There's the boom America that's going to the Sphere to see the Eagles in April,
Yep.
and then there's the rest of us not.
Exactly. I tell you, the folks that have taken credit risk have really done great this year. I mean, the U.S. Corporate High Yield Index, the Bloomberg U.S. Corporate High Yield Index, 9% return. The U.S. Leveraged Loan Index, 8.36%. The folks that have taken credit risk this year have really gotten rewarded. Are they going to do that next year, do you think?
I do think that credit's going to continue to outperform. Do we tighten a lot in spreads? Maybe not. But I think if spreads stay here, you're picking up carry, you're picking up yield over the treasury market. Spreads are tight for very good reason. Fundamentals are strong, and money is pouring into bond funds, because if you're getting 6-7% with low volatility, that's a great environment, and that's not an environment we've had since really the 90s.
Yep, exactly. And the 90s were very good to me. What are you telling your clients here about positioning for 25?
In terms of the Fed cutting 25?
Or just in 2025, what are you telling your clients? What are you thinking about that, where the opportunities might be?
We're telling people that you should be in active fixed income. I think there's a lot of money sitting in passive. And if you're getting 5% in passive fixed income, that's attractive. We haven't seen that in many years. But if you can pick up 100 basis points over that in active, I actually think when cost of capital is high, dispersion will increase. So interest rates may not move a lot if we stay in a soft landing, but you'll have winners and losers. And so what we're telling investors is be active, go after sectors where you can go out of index, you can do your research and figure out who the winners and losers will be within sectors and across sectors. So having the ability to actually take these active positions in duration as well as spread, that's what we're telling people, and fixed income is attractive.
I walk by the JP Morgan building every day, walking to Penn Station, and it is extraordinary what they are building there. It's going to be unbelievable. When does it open?
It's supposed to be, I think, September next year. I'm just happy that there's like a sidewalk now.
And folks, I mean, I don't know how these people, they're hanging off of scaffolding. 60 floors up in the air, building this thing. It's unbelievable.
We got to get to the news, but can I just state, I remember sitting in Dubai counting the cranes at one point in the expansion of Dubai. This is not Dubai, but the commitment to the city on Park Avenue.
Yep.
By Mr. Griffin and Citadel.
Yep.
I mean, the monkey bar is still open. I mean, important stuff.
Yep.
But the answer is there's a huge commitment. The Helmsley building went into foreclosure yesterday.
Saw that.
I think Priya Misra could do a bond transaction off that.
She could.
She
can refinance
it could be
that
like
thing,
a
no
bolt-on
problem.
to the new tower.
Park Avenue is in great shape, I think.
Thank you for coming in. Congratulations. 85th percentile, core bond. Wow. I'm just saying, are you on speaking terms with Bob Michael? I mean, do you ever see him?
Sits across from me.
He sits across from you.
He's
got the view of Central Park. Priya Misra, thank you so much with JP Morgan. An improvement to the tape in the last hour. We had red on the screen. Now we shift fractionally, red and green. NASDAQ and Russell 2000 giving us a green. We go the other way with the Dow, SPX. The VIX giving me nothing. 13.61. We got to make a note here. This is really important. On YouTube, we have the official surveillance countdown clock. It's a rare chronograph that comes from inside a mountain in Switzerland. But I see, Farrell's got the thing going on TV. They got the U.S. payrolls report. Countdown clock. I think a countdown clock on radio, it'd be like, back in the, at the tone of the bell. It's going to be like that as well. Futures at -5 with our news in New York City. Michael Barr.
Tom, Paul, Lisa, thank you very much. The New York Police Department released new photos that show the face of the man wanted in connection with Wednesday's fatal shooting of United Health Group CEO Brian Thompson. According to several reports, the suspect took a bus from Atlanta to New York City in the days prior to the attack. Authorities do not believe the suspect is a professional gunman. Former FBI agent Brad Garrett.
Going around Manhattan that has a camera, it seems like every block and sometimes multiple cameras, even inside the hostel, even inside the Starbucks. I mean, you'd have to be naive to think that your photograph isn't captured every time you step into a place.
Former FBI agent Brad Garrett spoke to ABC. President-elect Donald Trump is naming former U.S. Senator David Perdue of Georgia to be his ambassador to China. Trump says that as a former CEO, Perdue will bring valuable expertise to the U.S. relationship with China. California and Oregon are reeling from a major earthquake that struck off the coast of Ferndale in Northern California yesterday. The magnitude 7.0 quake sparked a tsunami warning and several aftershocks. Seismologist Dr. Lucy Jones.
7.0 is a quite big earthquake. It happens somewhere in California only every once a decade or so. So it's not a common event, but it's something we expect to happen.
In the end, there was no major damage and no tsunami. And finally, a symbol of the French nation, Notre Dame Cathedral reopens 5 years after a devastating fire. It only took the work of close to 1,000 laborers, both on site and in workshops across France. And it's finishing on time and under budget. President-elect Trump says he will be attending the reopening this weekend. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Just out on Twitter, and let me read it verbatim. I started Dell Technologies in my Texas Austin dorm room in 1984, and since then, Michael Dell and the company have brought in over $1.7 trillion in revenue. I'm so grateful to every customer, partner, supplier, and team member who's helped us get here. It's been a fantastic journey, and it feels like we're only getting started. The philanthropist, Michael Dell.
Yeah, just...
And an anniversary. Remember your Dell computer?
Sure, absolutely.
If I have less Jenny Creamale, I can get a Dell computer.
He's ranked number 16 on the Bloomberg Rich Index, $114.5 billion.
It's amazing how many times for Michael Dell's, that's over, it's done.
Yeah.
And he just keeps coming back.
Yeah.
Good morning, Michael Dell in Austin, Texas.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have some jitters on Wall Street just about how strong today's November jobs report will be. The data is going to offer up some clues on the path of interest rates when the Fed meets later this month. Now you see it. We have S&P futures down about 4 points. Dow futures down about 34. NASDAQ futures just ticked up about 4 points. We have the 2-year yield, 4.16%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that is little changed. We have the Brent crude. We'll start there at $71 a barrel, down about 0.8%. WTI crude, $67 a barrel. We have spot gold higher at $2,639 an ounce. And Bloomberg Dollar Spot Index right now is little changed. Bitcoin, have to point it out, down 1% at just over 97,000. Shares of AMC Entertainment, they're down this morning, 9%. A filing shows that it may issue to sell up to 50 million shares through an at-the-market offering through its sales agent Goldman Sachs. And Citigroup, it's named 344 new managing directors. That's the most in at least 6 years for the Wall Street Bank. And finally, Uber Eats. They're announcing some new holiday services. Yes, you can get a Christmas tree delivered and even Uber carolers. Yes, people will sing Christmas carols to you at your door, but it's only through tomorrow in select cities, including New York. That is a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you for that wisdom today. Paul, what does Hollywood do after Inside Out, Deadpool and Wolverine, Despicable Me 4, Beetlejuice, Beetle That, Dune Part 2, Wicked, and then you get the Twisters popping $250 million. But it falls off a cliff, right?
No, we got Wicked, Gladiator 2, Moana 2, huge box office numbers. And I saw recent reporting, Tom, they're making some really good money over the past 6 months, really this year, and they're getting prepared for 2025, which is going to be a huge box office year. Theaters are spending money renovating their theaters, getting ready for a big 2025.
I've been wrong on this, Lisa, for a long, like before you were born. People still go to the movies.
They still do. I mean, you put something in there that they want to go and pay for, and it's not cheap, as Lisa Mateo will tell us, because she takes the whole brood there.
She does.
But I mean, once you get in there, if you put a good movie in there, people will come. I mean, that's what we've learned.
Gura had to work Saturdays to take the horde to Moana 2.
Sure.
You know, you had to put an extra work day here, punch in.
It is. It's an experience.
Charlie Pellet went to like the 9 a.m. Sunday morning showing of like
Gladiator
2. I mean, only Charlie Pellet for that.
Yeah.
So there you go. Box office.
Alive
and well.
Let me know out on YouTube live chat. Go subscribe to Bloomberg Podcast. Get out there. We're live on YouTube worldwide. Let me know in live chat. Are you done going to the movie theaters? Because I am so done.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The Lisa Mateo Hour. It is our newspaper segment, hugely acclaimed coast to coast. Lisa, what do you got on the Friday?
I have your favorite person in the world, Kim Kardashian, okay?
Yeah.
She wants to, you know how her Skims line did very well. Well, now she wants to reinvent ski wear. Yes, on the ski slope. She's teaming up with North Face to do it. A collaboration between Skims and North Face. Yeah, 14-piece collection, okay? Comes out this winter. You have beanies, you have leggings, fleece jackets, outerwear, all in the shapes of beige and brown, which is kind of weird because you never see that on ski slopes.
You don't.
You see like the
bright colors,
bright colors. So she's doing the beige and brown.
Yep.
But she actually is a big ski aficionado. She started when she was 2 years old. She's been skiing.
Okay.
So when she grew up, she said she used the clothes didn't fit right, so she used to cinch them and do all these things, pick up the hem and shade them. So now she says she has created her own line. So it's Skims and North Face. I have to check it out. I'm going on a ski trip by Christmas.
Where are you going?
I'm not you, Sweeney. I go to Camelback. Okay.
Oh, I love I learned how to ski in Camelback. That is awesome.
Did you really?
Yeah, on the blue ice there. Yeah.
Yes. So I haven't checked the price of these, but they're coming out. Yeah, this winter. So Kim Kardashian expanding her little
empire
there.
Is it basically like Lululemon that's warm?
Kind.
Lululemon that's warm.
That you can wear in the snow.
Yes, exactly.
There you go.
All right, very good. I'll check that out.
Okay, so we have that, right? We have the ski wear.
Yep.
But now we go to the men's side, okay? Do any of you have a rich guy jacket?
Matt Miller has a dozen of leather
Why am
jackets
I
that
not
he wears to work.
surprised?
Everyone is different, and I just say when I walk up to Matt Miller, what animal is that? Is it horse? Is it cow? Is it like kangaroo? He's got these, and they're not cheap. Each one of these are very expensive. But he seems to think they're the greatest thing.
So he may be interested in this, okay? So they're calling it, yes, the rich guy jacket. But this one's a little different than the Matt Miller leather ones, okay? It's tailored. It's button-up designs. It has that little stand-up collar. Sophisticated, but, a little bit quite formal. It's made from cashmere. Some are custom versions by Hermes. Patch pockets. They also have, yes, 4-figure price tags.
Wow.
So this may be out of Miller's league.
No, that's right in his wheelhouse.
It really?
Oh my goodness.
Can we go back to the previous story?
Yes.
I just got a photograph here of Miss Kardashian.
Oh, you did?
She's
in the
not
ski wear.
wearing that going down Prima Corniche Vale.
It doesn't,
she's
doesn't
not,
look like
she's
it'll
not
keep you
wearing
so
that
warm.
on an expert slope at Vale.
She's a camelback, probably.
She's a camelback. Yeah, but apparently it keeps you warm. I don't know. Right. I would have to test it out for myself.
Very good.
Rich man jacket. Yeah, I know. From Kardashians to rich man jackets. Okay. So now we've been hearing a lot in the news, right, about the NYPD offering rewards. You've heard this lately with the suspect who's suspected of killing United Healthcare boss Brian Thompson. So where do they get the money? And the New York Times actually has this good look into it. It's actually not the NYPD, but it's from this donor-funded New York City Police Foundation. And they've been doing these rewards since 1983. They covered more than $3 million in rewards over that time. And you've heard it, Crime Stoppers, right? You always hear that out and about. They have the tip line. They offer about $3,500 for information that leads to an indictment for a violent crime, but they upped the ante for Mr. Thompson. They upped it to $10,000. So that's what they have. But it was an interesting look at where the money comes from, how long it's been in effect, and how the money gets, the ante gets upped. As a crime goes on.
So I guess for some people, that'd be a big incentive to come forward, make a phone call, and say, "Hey, I know this guy, I've seen this guy," or whatever.
And we'll see, because now they do have, a face of the suspect, so you have a face picture out there.
This news story just highlighted how many cameras are around this city. You're just, I think you have to assume you're being photographed at all times.
We assume London's like that, and we're not, and maybe we're wrong.
Yeah, so we've seen lots of photographs.
You got one more for us?
I do. This is a big take story. I have to ask David Gurr about this, but he's our big take guy. The quest to turn human waste into a cancer treatment. Okay, this is actually happening. It's a pharmaceutical manufacturing center in southeast France. It's called Mat Pharma. And every few months they get this huge delivery of human, can I say poop? I don't know. Feces,
we say poo
matter?
in the Bloomberg Business Week story.
Oh,
that might be the
poo. Okay,
the Bloomberg way approved.
But it's really precious because the raw ingredients is for this medical and treatment to improve the gut health. And what this company is a pioneer in is using that therapy to treat cancer. Okay. So all these donations are coming in, and they're being used for medical treatment to treat cancer. But they take the donations really seriously. It's more than when you're giving blood. You have to go through this entire process in order to be a donor.
Donor conditions are more stringent than they are for people giving blood.
Exactly. Medical examinations, blood draw, nasal swab, all that you have to go through in order to be a donor. But it's going to a good cause, so we'll see what happens.
YouTube live chat. Lisa, are you going to Costco this week?
Am I going to?
Is it busier when it's cold?
Kind of, because everybody's in that whole section where all the fleece stuff is.
Well, here's the question. Do you have your Christmas tree yet?
I do.
I'm going today. I think I'm going
You're going today, so we're going this weekend.
It's a charitable contribution.
I think this is a reasonable time to get your Christmas
tree.
So
you do the real tree?
Yes.
And you do the real tree?
Yeah, Francine Lacroix. She was out like a week ago.
That's too early.
And she has her kids carry her tree.
Yeah.
I have delivery.
Of course,
kids walking across London.
Yep, I know. Going through the tube with the.
I do the fake tree.
Fake tree.
Oh, come on! You and Pharaoh? Are you kidding me? That's un-American.
I do, so I don't have to vacuum.
Do you have the little light at the back end?
It's already lit up with
It's already lit
up.
Just
plug that sucker in and it's good to go.
Puts a couple bulbs on there and she's good to go.
I'm telling you.
Lisa Mateo of the Fake Tree, thank you for the newspapers. He is 80. And all I can say is in 1966, you stood in front of a mirror and tried to be Chris Hillman. No one has done Western country alt music like Mr. Hillman, here with Graham Parsons. Sin City, Burrito Brothers on Jobs Day.
It seems like this whole town's insane. On the 31st floor, a gold-plated door won't keep out the Lord's burning rain.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, and Edna Miller with us
Wow.
here. For those of you on radio worldwide, we are charmed on this Jobs Day with Edna here. She's in for some little holiday shopping.
Nice. Okay.
You go see the tree?
Yep.
Gonna go see the tree?
Find a
Edna?
Ferrari or a Maserati.
Yeah? No? Okay. Edna Miller with us here with Dad Matt as well. We welcome all of you as the holiday season begins. We begin strong. Catherine Kaminsky will join us. And I got to put Edna down. Paul, pick up the intro this morning. Here we go. Air Baby.
There is a lot going on here, Tom, this morning. We're going to bring it to you here. Coming up, Katie Kaminsky, Chief Research Strategist, Alpha Simplex. That's going to be solid, Tom. We got Christina Campmany, Senior Portfolio Manager at Invesco in studio. And then, Tom, somebody you know, we're talking a little economics with Claudia Sahm.
Claudia Sahm really bring us into the state of the American economy, into this job, all the confusion of the hurricane. Because we've got Kaminsky and Campmany together, let's get right to it. Bloomberg Surveillance on this Jobs Day. We're brought to you by Cohn Resnick Advisory, Assurance, Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. On this Jobs Day, we thank Cohn Resnick for foundational support. Right to it, the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. We see traders kind of in this wait-and-see approach. This is before today's jobs report, and that data is going to have a big say on whether the S&P 500 can build on its 27% rally in 2024. The benchmark on track for the best year since 2019. We'll start with S&P futures. Right now, they're down about 4 points. Dow futures down 44. We have NASDAQ futures up about 7. The 2-year yield, 4.16%. That's up 1 basis point. The yield on the 10-year, 4.17%, and that is little change. The CAC in Paris up more than 1%, and that's after national rally leader Marine Le Pen told Bloomberg News a budget could be delivered within weeks. Want to point out the euro. The euro little change at 105.84 against the dollar. Speaking of which, the Bloomberg Dollar Spot Index is little change. South Korea, another focal point. We have the Kospi right now down about 0.5%, and then we have the Korean won down about 0.2%. Bitcoin pulling back from a record high set above 103,000. It's now down about 1% at just over 97,000. We have an earnings beat from Hewlett-Packard. That was thanks to a jump in sales of servers to power artificial intelligence computing. Those shares up more than 2%. Then you have Lululemon up 9%. The company boosted full-year outlook and overseas sales. That really helped offset that softness in the U.S. And then from leggings to the bike you hop on when you wear them, talking about Peloton, shares up 2%. An upgrade from UBS to hold, leaving it with just 1 sell rating remaining. That is your Bloomberg Business Flash. Tom and Paul.
I keep seeing little pictures of Peloton like on the refrigerator, little hints, you know. you need this.
Yeah. It's up 58% year to date, but sadly it's down like a gajillion percent from its
What do you
high.
say about a half hour on Jobs Day? Claudia Sahm here, beginning into the 8:30 report in 26 minutes. Christina Kempmani will join us here in Fixed Income. But now, my theme here into the end of the year, this great bull market. Joining us now, Katie Kaminsky. Thrilled that she could join this morning, of course, with Alpha as Simplex. Katie, is there a trend right now that's actually tradable, or is this such an unusual log slope, there's nothing to do but watch it?
I would say there are still some very resilient trend signals. The equity market signals, particularly for the US, have been some of the steadiest. But there's also interesting things like coffee. Have you seen the prices of coffee?
Oh, yeah.
Percent. Wow. So, I mean, I guess when you say is there a trend, if you look across many asset classes, you see quite a lot. But I think fixed income is probably the trickiest, right?
We're going to go global Wall Street here with some fancy math, not continuous math, but within a discrete function, Katie, of T minus 2, T minus 1, T right now, T plus 1, T plus 2. Can Katie Kaminsky extrapolate this great bull market?
Well, I mean, if you look at most of our signals across different horizons, you're definitely seeing that the general resilience of trend strength in equities, particularly the US, is there. We did see some of that deteriorate in other asset classes, but definitely, depending on which filter you use, you're definitely going to see right now that equities look good. And I will also tell you that year to date, this year for trend following has been tricky, but the only thing that's worked this year that, you know, the best signals have been long term. So that's kind of an interesting thing that we've seen across our space, is that just kind of closing your eyes and using the longer term trends this year, you would avoid all the noise. Yeah.
18 years at MIT.
Exactly.
The theory is close your eyes and
throw
pray.
a dart. I mean, so Katie,
Well, yeah.
I'm looking at the U.S. dollar here. I mean, people are talking about a Trump trade. Boy, the U.S. dollar was a darn good trade. It's up, close to 5% just over the last couple, 3 months here. What do you make of the dollar?
Well, the dollar trade, I mean, for a longer horizons is trickier, right? Because it did really a V-shaped move, and it sort of bottomed out around the time where we saw some of the first cuts. But I mean, the dollar has been on a tear since October, I'd say. And what we've seen is that signals for the dollar have sort of polarized across multiple different currencies, and the dollar trade has been extremely strong, probably second behind the equities. But I think what's interesting now is a lot of people keep second guessing it, but really it's continued to be strong, not really given as much back as people had thought.
So what are we doing in the fixed income world here, Katie? Do you see any trends here? I mean, I know I've got my Fed cutting interest rates, but boy, I've got a 10-year Treasury still, kind of 4.17, 4.18%. What's the fixed income trade, if any, right here?
So we still see sort of net short positioning in fixed income. So it's sort of some bouncing up, possibly a little bit of, upside in yields. But we're also kind of surprised that you see a lot of divergence across fixed income globally right now. And I think it's just because it's sort of a holding pattern right now. So you've seen, for example, European fixed income signals shift to long. So that's kind of you see that divergence that the US Fed has been coming out and saying, we're not in a huge hurry. We're probably cutting, but that's kind of the message is it's not going to be swift and as strong as some people would have liked. So I think people are kind of waiting to figure out what that means.
Is the bond market trendless?
Well, I mean, I'd say last year, depending on your time horizon, if you basically, like I said, just started from the beginning of the year to the end of the year and was long, you would have seen, you've seen a lot of movement. So I'd say that we've had very little trends that are sustained in fixed income, and that makes sense because we haven't really had a ton of action in terms of monetary policy yet, and we've had a lot of anticipation all year long is what I'd say. So I'm ready for 2025 in fixed income.
Well, how about on the commodities front? I'm looking at the Bloomberg Commodities Index, going back to like maybe last May or something. We're down 10%. I mean, WTI crude oil below $68 a barrel. What's the commodities trade here? Because it suggests maybe inflation's not that big a deal.
I would have to agree. I mean, if you look across commodity signals in different sectors, you saw some long signals earlier in the year, but in general, most of the commodity signals have been short. And that is generally going to be positive for inflation numbers going into Q1. So I think that is going to be something that can be something helpful that'll help us to kind of give the Fed some reason to possibly cut sooner. But I think that takes time, right? So there's a couple exceptions like coffee, cocoa, other things that will still keep you nervous.
How do you know when to get out of a trend like coffee? You have a setup, whether it's exponential moving averages, whatever fancy math you're doing. Katie Kaminsky, when do you know to jump off the coffee boat?
So what we think about for, when a trend is ending, it's really about finding confirmation in the data. So you're measuring across different horizons and also sort of different filters that look at the data. And that sort of weighs against the strength of the trend and adjusts your position. So volatility is important, time horizons, and also just different features of the trajectory of the price.
What you just heard there, folks, is an absolute clinic of trend-based following. And the major thing is to confirm when you're in the trade, the unit differential, Paul, from what does a day chart look like on a unit of a week? What is a weekly chart? In the industry, people don't use weekly charts like they should, or monthly charts, but across different time zones. In this case, what is coffee?
Well, that's what happens, Sahm, when you get an undergraduate degree in electrical engineering from MIT, and then, that's not enough.
Yeah.
You go get a PhD in operations research. I mean,
It
who
gets
does
better.
that?
No, she interned at the Miracle of Science bar on Mass Ave.
Exactly.
I mean, that's the real point. Katie, have a great season. We'll see you here in a couple weeks. Catherine Kaminsky with us.
Great.
Alpha Simplex. Right to it. I've been reading it on Juan Soto. Let's get to the news with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Senate Republican Joni Ernst, a combat veteran and rape survivor, pointedly declined to support Pete Hegseth, embattled defense secretary nomination, calling for further investigation of allegations against him. Hegseth pushed back on questions from the media while on Capitol Hill, saying he's not giving up the fight.
I don't answer to anyone in this group. None of you. Not to that camera at all. I answer to President Trump, who received 76 million votes on behalf and a mandate for change. I answer to the 100 senators who are part of this process and those in the committee. And I answer to my Lord and Savior.
It comes as President-elect Donald Trump is naming former U.S. Senator David Perdue of Georgia to be his ambassador to China. Trump has also selected venture capitalist David Sachs to serve as his artificial intelligence and crypto czar. French President Emmanuel Macron vows to remain president until the end of his term, due to end in 2027. Macron says that he will name a new prime minister within days following the resignation of ousted Prime Minister Michel Barnier. Health officials in the Democratic Republic of the Congo expect to know within days the cause of an infectious disease outbreak termed Disease X that has sickened hundreds of people and killed at least 79 since late October. The disease has symptoms including fever, headache, cough, difficulty breathing, and anemia, and is likely to be airborne. Finally, the White House Christmas tree lighting ceremony took place last night.
3, 2, 1.
President Joe Biden attended his final White House Christmas tree lighting as president.
May I wish for you and for the nation, now and always, as we continue to seek the light of liberty and love, kindness and compassion, dignity and decency.
This year's tree, a 35-foot red spruce. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
McDaniel and the crew over at ESPN are lining this. We got to get my good friend Steve Cohen on. I mean, we're down. This is like the weekend where they want to do this by the meetings because Scott Boras has other people. Like, where does Juan Soto go? I don't see the Detroit Tigers listed here, Paul.
No, I don't.
No, I don't think so either.
I don't know where I really don't know where
Mets, Red Sox, Dodgers, Blue Jays. What a shock.
Yeah, exactly. I mean, I guess it's a Boras client, so a lot of folks are saying, whoever writes the biggest check. Let's just stop there.
Yeah.
And who's got the biggest check?
What do you think, Michael
Steve
Barr?
Cohen, I don't know.
Well, I know that's why he's not going to the Tigers. When your whole payroll is over $18 million, that's it. So
that's a lot of Domino pizza.
Yeah.
Exactly.
So this up in the air. It's like like Paul said, whoever has the biggest check.
Yeah. For those of you worldwide, why Juan Soto? He's like Wade Boggs on steroids.
And he's young.
His bat, he waits and waits, and he walks like no one. It's Jobs Day. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, a little bit of a cautious tone over markets this morning. This is before today's key jobs report. It could provide traders with some more clues on the Federal Reserve's policy path, and this all comes at 8:30 Wall Street time, 15 minutes from now. That's followed by Rita's sentiment at 10 a.m. All right, let's get to NASDAQ futures. Up about 6 points. We have Dow futures down 49, S&P futures down 4. The 2-year yield, 4.16%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that's little changed. We head over to Brent crude. Right now, it's down about 0.8%, $71 a barrel. WTI crude, $67 a barrel. We have spot gold higher at $2,636 an ounce. The Bloomberg Dollar Spot Index right now is little changed. We have companies making news is Boeing. Reuters reporting it plans to restart production of that 737 MAX airplane this month. That's following the machinist strike. And then Citigroup, it's named 344 new managing directors. That's actually the most in at least 6 years for the Wall Street Bank. And finally, back to earnings. We take shares of Ulta Beauty. They are up 9%. Better than expected results the most recent quarter. Raised the lower end of its full year outlook. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And now, with the titles on Wall Street, we go to surveillance Wall Street ego director Paul Sweeney. What in God's name, how does your life change when you become a managing director at Citigroup?
Well, here's what happened to me. I became a partner at Salomon Brothers, which was a big deal back in the day. I got one lunch at the partner dining room. 15 minutes later, we were sold to Sandy Weil and Travelers, and then I became one of like 1 billion managing directors at Citigroup. So I got the partner cachet for like 15 minutes.
What was the lunch like? Was it like Rubber Chicken Hilton?
No, it was top notch, and they bring like a after meal drink cart out.
Do they?
Yes.
That's where that came up with
old
surveillance.
school Wall Street. Yes.
Well, you guys, Alex, and you come off at 12 noon.
Yeah.
That's the lunch card I see you
Cocktails
guys
right away.
Cocktails
No problem at all.
Right away.
Yeah, I got one lunch and then we were sold.
You say good morning on Jobs Day. Let me give you the date calendar here. We're going to start strong. Christina Catmanning joins us here in moments. Then Claudia Sahm will join us. Lisa will give the numbers. We'll look at the market reaction. We go back to Dr. Sahm, and then Sarah Wolfe will join us. Kathy Jones of Schwab. And then on the equity markets, as we just talked to Katie Kaminsky, Lori Calvasina will join us as well. Right now, some choice minutes here with Christina Catmanning on the bond market. What I'm hearing with Invesco, what I'm hearing is the bond market is sort of sleepy forward. I don't think I'm going to hear that from you. Where's the excitement now? Where's the intellectual interest looking out into fixed income?
Look, I think there's so much uncertainty in the market about we've gotten past the hump of the election, and we know that we have a red sweep, but thin margins, and now it's just what policies can the Trump presidency and the government put in place, and what is the order and what is the magnitude? And so I think there's still so much uncertainty about 2025 and how that policy comes out.
So what do you do, buy triple leveraged all cash fund?
I think the front end still offers a lot of value, right? Like, and you can look at structured products in the front end or a double B credit, and there's a lot of value that you're supposed to, especially in December, in a couple weeks, we expect that the Fed eases another 25. And with that, you have front end rates close to flat to policy rates. And taking out the negative carry in the front end, I think leaves, again, a lot of value there.
But the best performance this year, by far, has been taking risk. High yield, leverage loans, 8.5%, 9% total return year to date. We haven't seen those numbers in a long time. Is that game over? Has that been played out, do you think?
I don't know that the game is over. Look, I think the backdrop remains this story of U.S. exceptionalism. And, credit as a whole, people have been skeptical of credit because spreads are so tight, and they continue to perform and perform and perform. And I think that remains because...
I don't mean to interrupt, but this is really critical into December and into next year. We talk effortlessly about exuberance in the stock market. And maybe it's not there like 1999. Is there exuberance in the Invesco bond market right now?
I think in terms of is there not value and are things too rich? I think out the curve, the level of yields seems too low for us, and we're not really taking into account some of the risk and that there needs to be term premium, right? Like, we came with the strength of the economy into September, we steepened the curve in U.S. rates, and you had some kind of repricing to there should be term premium in the market. And the expectation, again, with a Trump win would be that you'd have higher yields and a steeper curve. And that's been brought into question with DOGE and deregulation and all of these things. But we don't really have context of what those mean. So I think out the curve, I think is where we're a little bit more skeptical of should the range maybe in 10s be 425 to 475, but there's still some uncertainty there of where we should end up, and fiscal is still real.
December 18th, we're going to hear from our Federal Reserve. What do you think they're going to do, and what do you think the messaging is going to be from them? Because I suspect they'd want to try to set up some expectations for 2025.
Yeah. So look, I think the Fed is sitting with the same uncertainties that all of us are trying to grapple with of we know some of these policy objectives, but we don't know the magnitude and the order and how they're put into place. So we think that the Fed certainly goes 25 in December, and I think the messaging and Fed communication this week has echoed that. I think the market grapples with, do they pause? Do they have some kind of pause period, or do you slow to quarterly? Yep. Our kind of long-standing is you get 100 to 150 basis points of easing under your belt. The Fed still thinks that they're in restrictive territory. And then you say, let's wait and see, A, what the impact of that easing is, and B, what actual other policy mix we get, and what's the relay to the economy.
I'm looking at 5-year CD rates. When I have the triple leveraged all cash, folks, I'm not used to doing this. I had no idea how those yields have come in. I thought a 5-year CD was 5%. A little more. It's not. It's 4. It's 3.4. Capital One 3.5. Whatever.
And again, all of the curves have inverted back, right? Your 2-year yield and front end is where you're getting the most.
So I think a critical thing here. We're going to get to Claudia Sahm here in a moment, folks. Jobs Day, 6 minutes away. Christina Catmani, I think a critical thing is your definition of out the curve, your definition of long term. Our audience worldwide is 20 years, is sort of where it becomes long term. Yours is it?
I think it starts really at 10s because you talk about term premium there. You have all sorts of specific dynamics for, are there pension flows? Is there stripping data? The strength of the equity market in itself has led to bond demand as people rebalance portfolios. So I think it's a little bit of both. And the payroll data today, let's see what we get. But I think we get so hung up on, we had a 12,000 print last month, these specific numbers. Where are our trends? What is the smooth number? And what is our flat line for what kind of job growth do we need that's just break even for the growth in the economy? And I think we remove ourselves from that sometimes.
We're almost back to kind of a flat yield curve here with the 2-year at 4.16, the 10-year at 4.18. I'm an equity guy. That means nothing to me. But Lisa Bromwich tells me I need to pay attention to this stuff. What does it tell you?
Look, I think that we're just underappreciating that there needs to be some term premium. We've long said that, and we've long been looking for a steeper curve. I think the difference of this market's buy-in to a steeper curve from earlier in the year, when the expectation was you could have something really break, the Fed is going to cut through neutral, that you could really say the curve should be 100 basis points steeper.
Yep.
Now it's not that magnitude, but like there still needs to be some term premium, and I think a flat curve isn't giving you value out the curve. So we'd much rather own in the front end.
This Jobs Day, Christina, thank you so much. Christina Kempany with us here as we go from equities with Kathy Kaminsky to Christina's work, and now Claudia Sahm joins us on this Jobs Day. I want to take this back with Dr. Sahm, and people go, well, why is Dr. Sahm Dr. Sahm? And it's bulletproof economics at Michigan, all of her work at the Fed, her redefinition of how we think about economic slowdown. But how about this, folks? Triple major. I mean, you hope your kids do a double major.
Yeah.
Sam was like messing around. This is a denizen. She's there economics, and she goes, that's not good enough. I need political science. And she pops German on the back end with a triple major. Claudia Sahm joins us, the power of Denison University. Dr. Sahm, why is this jobs report distinctive? Don't tell me it's the hurricanes.
Well, it's our last jobs day of 2024. I think this is a good time to, get our heads out of the weeds. Yes, today's number is going to be so hard to parse. Don't get excited about a big number, a small number. It's the hurricanes. No one can guess these things. And yet we have seen real movement in the labor market, real slowing in the labor market during the course of 2024. It's been largely slow and maybe not so disruptive. In the summer, it got a little exciting with the unemployment rate. But in general, we've just been in a slow grind. And then the question in a big debate is that okay? Is that what we need to rebalance? Or are we losing something while we lose that dynamism?
Claudia, what percentage of America is in recession? They're like, we booked Dr. Sahm. Tom, we got to make some news here. Claudia Sahm, what percentage of America feels or is living recession right now?
I think if you ask people, are we in a recession? Are you in a recession? They tie that word up with a lot of negative feelings, a lot of struggle and hardship. They don't tie it up to the National Bureau of Economic Research's definition of a broad-based contraction economic activity. So when I see those surveys of people saying we're in a recession, I understand that what they're telling us is they're facing some hard times or they have family and friends who are. And that the sad reality is that's with us always. I mean, if you look at even say a group like Black Americans is not the case at the moment, but over long stretches of history, what their unemployment rate outside of recessions looks like the recessionary unemployment rate, right? So, I mean, we just have pockets of hardship in the country, and that hasn't changed from this. But it is a reminder we've got work to do. And frankly, for those pockets of hardship, the best thing that we have to bring is a strong labor market, where it's really working, especially at the bottom. And we saw some of that a few years ago, and that's part of what is slipping away.
Claudia, we now have, I guess, a little bit of history here to look back upon. Can you talk to us how immigration, legal and illegal, has impacted the labor market over the last several years? And are you making any changes to your assumptions given the new administration?
It is going to take us some time still to sort out exactly what immigration's effects have been on the population. These just are not estimates that we put together as quickly as the Jobs Day numbers. It takes time. There clearly was an increase in labor supply, a lot of that, not all of it, but a lot of it coming from immigrants. That's an important part of our success story of getting inflation down without that recession, and we've still got growth. So I think we'll see, in hindsight, that more clearly that's been an effect. We're already seeing signs that immigration has slowed from what had been a very fast pace. And then, of course, the policy questions around, are we just going to slow immigration? Are we going to throw it in reverse with mass deportations? And that our workers are so fundamental to the economy, to economic growth, then that's an extremely big policy question. It's almost so big that it's hard to imagine those mass deportations.
Let's stay with Claudia Sahm. She will continue with us. We're going to go to the jobs report here in less than 1 minute. I want to emphasize Michigan data out, important confidence data out. We have to mention that with Dr. Sahm on. I mean, she won't come on unless we mention Michigan data.
Ooh, Michigan beating
She
Ohio
was there
State
with
is still
Ned
the story.
Green. Yeah, that's true. Michigan data at 10 o'clock as well. But we're going to continue with Claudia Sahm here and get the market reaction. We've got all the two jobs reports coming up. How do we do this off the Bloomberg Launchpad? We look at futures, slightly red right now, small stocks up 4. I don't look at Bitcoin, to be fully honest. I look at the 2-year yield, 4.16%. And critically, I look at the 10-year real yield of 1.91% into the jobs report. I have fractionally DXY, the blended dollar index, stronger. Those are the metrics I use as we come to the jobs report. Here is Lisa Mateo.
This is breaking news from Bloomberg.
And the numbers are coming in for November. That change in non-farm payrolls, as we've been telling you, the survey was for 220,000, coming in at 227,000, so slightly a tick higher. But again, the prior, 12,000. Want to get to the unemployment rate for November. The survey was for 4.1%, came in a tick higher at 4.2%. And then we get to average hourly earnings for November. That's month over month. The survey was for up a rise of 0.3%, came in at a rise of 0.4%. Of course, Paul and Tom are going to break this down in just a bit. We also have University of Michigan sentiment, like they said, at 10 a.m. What I want to do is get to the reaction. So we see green on the screen now. S&P futures, little change, but up 3 points. Dow futures, little change, but up 13 points. And we have NASDAQ futures up 0.1% or 29 points. The 2-year yield, 4.10%, down 4 basis points. The yield on the 10-year, 4.15%, and that is down 2 basis points. That is your Bloomberg Business Flash. Tom and Paul.
Getting the chart up here. Paul, I'm looking at it's like lift to the market. It's like, Fed, what are you going to do? And maybe indeterminate, but market clearly moves the dollar weaker.
Yeah, absolutely. Lisa nailed that. Everything we needed to know. The headline number coming in better than expected. I look at the wages. What are people taking home, Tom? Average hourly earnings year on year, 4% solid. The consensus is 3.9, and you got inflation below that. So the real, kind of people are doing okay. If they have a job, they're doing okay.
Green on the screen, the VIX critically comes in 13.18. We don't break through to a 12 handle, but there's a constructive bull market tone to it. In the fixed income space, some real genuine move here. The 2-year yield my eyes are failing me, in 4 basis points.
4 basis points.
4.10%.
Yep.
The real yield plunges is maybe overdoing it, but at 1.88%. On the 10-year real yield, it's a stir to the market, again with dollar weaker. Unfair to go to Claudia Sahm here to continue this dialogue. We will. But for Dr. Sahm, she, of course, professionally digests 2 voluminous reports as well. Claudia, when I say go beneath the headline data, where does Claudia Sahm go beneath the headline data?
Well, the first place that I went to look, seeing the unemployment rate tick up, which is a tick, not anything to get too worked up about, but just to see what was happening with labor force participation, if that can kind of be the good reason to explain it away. And that doesn't seem to be what's going on there. So that is something to keep an eye on. We've seen the unemployment rate really flatten out. So it's a concern. But in general, I don't know, it doesn't seem like a lot to react to here. So
you sound like somebody on the second floor of the Eccles building. You get to go into the room once a year. If you're a 28-year-old PhD newly minted at the Eccles building, what are you telling governors, presidents, and the chairman?
Well, if they were consensus, they can go in and say they nailed their forecast. Really, getting something hard, like payrolls and going through the hurricanes and the strike. This is really more of an art than a science. And what they are trying to pull out of here is what is that underlying pace? What's the 3-month change? How are things going? And really, it looks like we're kind of back where we were before hurricane. So it seems to be giving a pretty consistent story of the slowing, but nothing real shocking here.
See how Dr. Sahm goes to the 3-month moving average.
Yeah.
I mentioned that an hour ago.
Yeah.
Paul, that's the way we roll.
That's the way we roll. And Tom, I'll just note the revisions from last month. We were at 12,000 was the reported number, revised up to 36,000, just to put that out there. Mm-hmm. Dr. Sahm here. So if I'm the Federal Reserve, I have to feel like I'm doing my job. I'm not even pat myself on the back here.
That's a nice way of putting it.
So do I cut rates in December, then just wait?
I think they've been doing this kind of look ahead, and this is very, I'm sure, consistent with where they thought the data were going to end up today, largely. And so they're on a path to have a cut in December to keep this pulling some restrictiveness out of the economy, doing it gradually. And I think this ought to support that. Now, the last roadblock to the December cut, which I think the Fed is very much on track to do, the last roadblock is next week's CPI. But even that, I mean, they've had a plan, they've articulated it.
Claudia, I've got to go. One final question to all the character of Michigan academics, and that is the study of inflation. Can we use our usual tools to study this modern inflation? Or are we so overwhelmed by technology, its shift to productivity, that we can't measure inflation with the confidence that Ned Gramlich and company told us we could do?
Well, our statistics, the way we measure inflation or any other aspect of the economy, they're always evolving. Right? The Bureau of Labor Statistics is always bringing in new data, new tools. They're refining it. They don't, it's not the stuff of headlines, but we do have to keep up with the technology and the changes. And I think largely the U.S. statistical agencies do a good job. There's always more to do, but it does, it's fine to have more tools in the toolkit, and that awareness, and we should have an awareness that no number that comes out, whether it is well crafted, is the truth, right? Like, these are estimates. This is our best estimate of what's going on.
Claudia, thank you so much. Claudia Sahm, New Century Advisors, all of her work at the Fed and, of course, of Michigan. As Paul mentioned this earlier, the revision is 12,000 up to 36,000. The sum 2-month total is 56,000. Positive revision. You add them together, 227 plus 56. I don't have the HP12C in front of me. I'm guessing 283 is a constructive number here to develop a 3-month moving average and to be thematic.
Yep.
That's a new word. We're thematic.
We're thematic.
Joining us now from Morgan Stanley. She's thematic.
She's writing a research note as we speak here, Tom.
She is. I mean, it's gifted. Thematic in macro investing. Sarah Wolfe joins us right now. That's my theme today. Forget about the noise. Grab a 3-month moving average. Is that what you're doing?
I'm looking at all the underlying details, and it's kind of just showing that the economy's in a solid place, and we're not going to see much market moving around this. We're going to look towards the CPI data, but the economy's chugging along. It's in a good place, so we don't need to put on more cuts for next year, and it's not so high that we need to take off cuts as well for December. If you look at the underlying trend, we're probably running at around 150,000 a month, which is a pretty good place to be right now for Powell.
I mean, I look at the wage number. Paul mentioned a tick better than we are. Do we have an inflation-adjusted real wage? Lisa Mateo questions that.
We're having real wage gains, that's for sure. If you get CPI data next week at 0.3%, then that's an increase in real average hourly earnings. That's one of the reasons why we see a little bit of improvement in low-income spending next year, because you're finally getting that real buying power back. Wages are now rising above inflation. We've been waiting for that to happen, and now we're starting to see it, and it's pretty sustainable.
Thanks to Eric from the back row here. Interest rate swap traders are signing an 82% chance of a rate cut at the Fed December 18th meeting. That's according to EJ. Markets reporter.
It's the same study that's guessing where Juan Soto's going, right?
Yeah, please. Who knows? The highest dollar. So, Sarah, if I'm the Federal Reserve, I'm calling soft landing, right? I mean, I think we got to give these folks some credit here.
Yeah, well, if you look at the underlying details, it's even better than the headline, because you're not getting an extraordinary amount of strength in these holiday shopping categories, which is where I think markets were expecting there to be more strength. So retail trade was actually down 28,000 on the month. Transportation and warehousing was a mere 3,000, so we didn't really get that big upside. That means that you actually got a lot more breadth in payroll gains. So financial activities were strong, professional and business services, more confidence in these white-collar jobs. And then we're still getting hiring at the lower end of the income distribution, education, health, leisure, and hospitality. So I do think that the breadth in the payroll print is notable.
She gets numbers that we don't get, Tom.
She gets
special
amazing
numbers. I don't know.
Just so let me translate this, folks. If you're at a fancy firm, a white shoe firm like Morgan Stanley, it's leisure and hospitality.
Right.
Here at Bloomberg Surveillance, it's bartenders.
Exactly.
Okay, continue.
So, Sarah, I mean, as we step back here, I mean, in 2025, How are you guys thinking about this U.S. economy? What's your GDP outlook? What's your inflation outlook? Are you constructive, or do you have some concerns out there?
Yeah, so first let me talk about the labor market for next year, because we're here right now.
Yep.
If we're getting tighter immigration policy, you could actually start to see that unemployment rate push down lower, right? Because you're removing labor supply from the economy, and wages could go a little bit higher. So it's going to be an interesting dynamic next year where payroll growth could be quite a bit softer because you have less population growth, somewhere to the tune of 50,000 to 100,000 a month. That looks weak compared to where we've been running the last couple of years, but that's still going to reflect a very tight labor market because it's coming from the supply side. On GDP growth, we have about 2% for GDP, so that's a slowdown from where we are this year. Nonetheless, there's a lot less downside risk, recessionary risk, right? There's policy risk, but we're moving away from the recession risk, and that's one of the reasons why markets could be a little bit more optimistic, even with weaker GDP growth.
On your commute across America, good morning, and thank you for joining Paul Sweeney and myself. Apple CarPlay, Android Auto, thank you. Sirius XM channel 121. They showed me those numbers 2 days ago. Wow, thank you for joining. On Sirius XM on the quarter, 99.1 FM Washington, up to Mount Katahdin. A little chilly today on Mount Katahdin.
I bet you.
I'll check Mount Washington here in a moment. See if we can do a hot toddy at the Mount Washington Hotel. Good morning, 92.9 FM in Boston as well. What do we have upcoming here? We got Sarah Wolfe with us right now. Kathy Jones will join us. And then very importantly, an extensive conversation with Lori Calvasina on this great bull market. She's killing it today. Small stocks, Russell's up 0.9% here, more volatile than the others. Sarah Wolfe from Morgan Stanley with us right now. Where's nominal GDP? Where's the animal spirits next year? Are you telling me we get a sustained 5%, or do we dip down a little bit? Not in the lethargy, but we just finally pull it back.
I think we could start the year around 5 or 6%, and then it's likely going to...
Did you say 6?
5 to 6%. I mean, if we're still getting GDP growth at 3%, I think there could be a little bit of upside in consumer spending in the beginning of the year. Think about the wealth effect. That's going to start to come through in early 2025. We've had a really significant rally in equities, and that's going to pass through into some consumer spending. And you get a little bit of a rebound in lower income households as well. And then I think we start to get a bit of that slowdown with immigration policy, with tariffs. And so markets need to be watching that slowdown that could start to hit the middle to the end of 2025. And I think that the fixed income markets are definitely aware of that. Equities seem to be a little bit more excited.
Did anything
See
change?
how she did that?
Well, I know.
She learned that from Mike Wilson.
Yes.
A little more excited is how you hedge that.
I know. Sarah, did anything change for you guys at Morgan Stanley from the economic and strategy standpoint? The day after the election, we now have a Republican president about to take office. The Congress, Republican, although maybe not as wavy as some people would think, but still a Republican-controlled Congress. Did that change your outlooks, your forecasts?
Yeah, our economics team definitely took up inflation a bit for next year, right? We had inflation coming down closer to 2% by the end of 2025. Now it's looking closer to 2.5% because you're getting that inflationary effect from tariffs. What that also means is that you have to take cuts off the table. Fed's not going to be able to cut that much next year. We have 3 cuts in our forecast. The Fed's likely going to have to take some cuts out of their forecast at the December summary of economic projections next week. And that's going to reflect higher inflation not only for this year, but they're also going to try to be modeling out the policies for next year in their own projections. Right. And it could lift up their expectations for inflation.
Tell me, one of the themes is we got a 3% GDP growth in China. Who knows? But the answer is it's a subdued Pacific Rim. You got NX off the back of the equation. When you say, here's our, as El Arian would say, here's our unknown unknowns, how unknown is the export dynamic globally, which, frankly, Morgan Stanley invented the analysis of?
I'll tell you what I'm watching the closest. It's what's going to happen with Mexico and Canada, because even though we have a lot of trade with China, we're way more exposed to Mexico and Canada. Our value chain, our supply chain is completely interlinked with these two economies. It's a quarter of U.S. trade to Mexico and Canada. 80% of exports from those two countries come to the U.S. So, of course, tariffs are being used as a negotiating tactic as we go into the USMCA, but if we really do see an increase in tariffs there, that's going to be something to watch, and that's going to really hurt U.S. manufacturing.
I mean, the uncertainty back end here is just amazing, because you take, whatever the math is on net exports is a percentage of total GDP. The consumer gets all the attention. Right. But I'm sorry, NX is not a small matter.
It's not a small matter.
Get one more. Calvasina is waiting to come
I know.
Get one more.
One more for Sarah. We've got her in our studio here. So, Sarah, what's the headwind out there that maybe we're not thinking about? Maybe the market's not thinking about. Are you guys penciling out some concerns out there?
I would say the biggest headwind is that even though you're going to get an extension of the Tax Cut and Jobs Act, it's mostly going to be benefiting upper income households, right? And so you need to think about how much of that actually starts to pass through into stronger consumer spending. And I'm talking about 2026 now, right? A little bit further out on the outlook. Households tend to spend savings when you're that high income if you're getting $400,000 or above. So do we really get that much upside to economic activity?
In the old days, you don't remember this, C.J. Lawrence, Bear Stearns, David Malpass, John Riding, whatever. In the old days, people like you would model out 36 months. The only thing I can model out right now for 2026 is Ellen Zentner's going fly fishing somewhere. That's the only thing I know. Can you really go out even to July of next year with any confidence?
We have to talk about all the uncertainties, but what I could say is maybe a near-term uncertainty. We're getting University of Michigan at 10 a.m. We've started to get a little bit more data on business confidence as well. The hope, right, is that now that we're past the election, we can start to get some animal spirits from consumers, from businesses. They could start hiring again. The biggest worry right now is that hiring's been slowing down for 2 years now. Can that start to stabilize? That's what the Fed really wants to see, and how big of the election play.
That's brilliant. Sarah, I got to get this in one more question then. If hiring has been slowing down for 2 years, why do I have a sub 5% unemployment rate? And the answer is what? Immigration in the unknown?
I mean, layoffs have stayed really low. You're not seeing hiring come down and layoffs pick up as we normally do, right? People are still retaining their workers. There's this uncertainty effect that's weighing on hiring, but it's not so bad such that people need to start getting rid of their workers.
Sarah, thank you. Sarah Wolfe with us here this morning with Morgan Stanley. Just you can't say enough about what we've lined up here. The team, the interns aren't the same in December, Paul, as they are in the summer.
No. But
in the summer they're out there. They're the bar at Grand Central Station underneath the Park Avenue. I can't remember the name of that.
There's not a bar I don't know there.
The kids in the summer are there. In the winter they're working. This is really great setup. Thank you, Sarah, so much. Sarah Wolfe with Morgan Stanley. Joining us now, and my theme for the end of the year is this great bull market. One of the charms of Lori Calvasina, you're never going to hear her say, go to cash. She is in the market. Lori, rip up the script going forward here into next year. Do you really finally see a shift to that once every 10 years small cap performance, or does Mag Stebbins still reign supreme?
Well, thanks for having me, Tom. And look, I unfortunately think that things are just going to stay choppy for a while. And if you look back to 2016, 2018, the early days of the first Trump administration, we had three distinct trades into small cap relative to large cap. They were short-lived. They were sort of fickle. They were really powerful while they lasted. They unwound really fast. And I do feel like we're set up for a choppy environment again. And that is with a big caveat, unless we can get a clearly hot economy. So I think the things you really need to see for small caps to embark on a longer term outperformance cycle, reacceleration in job growth. We just got a little bit of color on, how it's been decelerating for quite some time. You need to see things like ISM manufacturing. We're stuck at the bottom there. We need to really see that uplift. And we need hot GDP. GDP forecasts are trending at 2.0% for next year. You need something more like 2.6, 2.7 historically for small caps to really outperform, and we're just not there yet.
Lori, my good friend Jim Cramer over at the Death Star, and Jim would always say it's like baseball. 30% of the stocks are going to do well. 70% of the stocks are not going to do well. Which 30% of the stocks do I want to be in?
So, look, I would say I still like financials at this point in time. And I know it's gotten uber consensus, and I think we really have to watch the valuations closely in the new year. But if we go back to that small cap part of the market, I do still see a lot of room for those to continue. And I do think we're only about halfway through an earnings revision recovery in banks. So I think you want to be selective here. In large cap, we just upgraded communication services. It's cheap. It's had good, solid earnings and revenue revision trends. And there's not really as much political, sort of relevance to that sector, frankly, in the next year. So I think you want to own different things in different parts of the market cap spectrum, but just be really, really, sort of focused on the individual stocks, focused on the individual industries. And I don't even necessarily think it's a Mag 7 versus everything else kind of market at this point.
I mean, what's important here, folks, is we've got a whole secret like CIA, espionage message system here that we go back and forth on. And I'm getting tidbits. Paul particularly is giving me information all the time. Gura never gives me information.
No,
I get nothing.
Nothing.
Gura's like, They're playing at the Grand Ole Opry. Thank you, David. I really needed that. You sent me a note the other day, Goldman Sachs at 600.
Yes. How about that?
Wow.
How about that? Our good friends over there at Goldman Sachs. Lori, when you're out there, I know you travel a lot visiting RBC clients all over the world. What's the pushback you get from clients about this market? Is it valuation? Is it just earnings fatigue? What kind of pushback do you get on maybe an optimistic call in the market?
So I would say this week, if I'm just, and I've just been on the road the last couple of days, I sensed a lot of nervousness. I started polling clients, saying, are you bullish? Are you bearish? Are you, cautiously optimistic but cautious? And I think people were sort of in those latter two camps. I had a number of people say, look, the market's just going to keep trading up in the short term, but we're really worried about what happens, say in January or February. I had other clients who said, we think next year is going to be good, but we're sort of worried about, kind of trends in the second half of the year. So I think in general, what I'm sensing is nervousness on sentiment, how frothy it's become, sentiment, and positioning as well. And really a lot of concern about valuations, and also a lot of concern that we've pulled some of the tailwinds forward into the price. And so there's, probably near-term optimism, but overshadowed by longer-term concerns.
Lori, do managements have degrees of freedom to act? One of my arch themes, folks, is managements adapt and adjust way more than what the street thinks. Lori, does corporate management across all S&P sectors, do they still have wiggle room to adapt and to adjust to events that are handed to them?
So if you listen to what they've been saying since the election, and and I'll be honest, I haven't read the last few days worth of conference transcripts and earnings transcripts, but if I think back to the beginning of the week where my reading was current, they're still telling the story that they are, right? And so they're generally going back. There's tons and tons of questions on tariffs, and they're going back and they're saying, well, we managed through this very well. We've recalibrated supply chains, yada, yada, yada. And they said similar things after SVB, right? A totally different issue, but really emphasized their ability to sort of manage through a challenge. I think what I'm maybe concerned about on this tariff issue is that a lot of the commentary has been focused on, well, we've reduced our China footprint. Well, we don't have as much China exposure as we used to, and we've moved some things into Southeast Asia or Mexico. And to the extent that you think this tariff challenge is going to be different than the first one that we went through in 2018, 2019, it's not clear to me that companies have really figured out how to handle that yet. I would say the other thing is, cost pressures seem to be coming back, and the tone on earnings has been a little bit more negative the last 2 quarters, and margin expectations are coming down on sell-side consensus estimates for next year. So I do wonder if we're starting to run out a little bit.
Paul, yada, yada, yada is CFA level 4. Miriam has that, is boring or empty talk.
Oh, okay.
That, just so you know, yada, for our international audience, we got to translate yada, yada, yada.
Sorry.
Hey, Lori, what screens well for you guys going into 2025 here? I mean, I don't want to be boring and just say I'm going to, like Tom Keene just own the Magnificent Seven and clip coupons. Right. What else are we doing here?
Look, I think if we sort of veer away right from the financials, which we all know about, and the comm services upgrade that we just had, I've been noodling over the energy sector as well, and we've kept an overweight on there. Hasn't worked out. But if we look into next year, it's still a very, very cheap sector. It's still an area where the policy mix seems more favorable in terms of potential tailwinds and headwinds in the year ahead. And one thing we're worried about with a lot of different sectors, frankly, is the impact of a stronger dollar on earnings revisions, and energy sensitivity is a bit lower there than other sectors. So that's another one we're sticking with. And I've actually found, sort of good interest in that call. We've also found good interest in our upgrade of comm services earlier this week. And I think, again, financials are consensus. Right. And as we dug into that, we've said, look, the capital markets names, the investment banks look a little pricey on our work. But if you look at the traditional banks, especially the smaller banks, insurance companies, there are pockets within financials that still have good valuation appeal. So I do think you want to be a bit more selective in the financials.
Lori, ample time. Thank you so much. Really appreciate it with RBC Capital Markets as well. This came in from someone, off YouTube live chat. The mimosas today. Are we having Tito's with the mimosas today?
Sure, that's how you roll.
Is that how we're rolling on Jobs Day?
Yeah, why not? Jobs Day. Let's have some fun here.
They have little cute, like golf stick things. They have little puppets that they put over the bottles now. They say Tito's. They're orange.
Do they? Okay. I'm
I don't
down
know
for
how
that.
I knew that.
I'll go for that.
Vet Bill likes Tito's.
Yes.
He's into Tito's. Joining us now, help me here, Bob. Do we have Ms. Jones on us? Kathy Jones joins us from Charles Schwab. Thank you, Kathy, for having us finish the hour here. Strong. I got a jobs day. I got a continued equity lift as well. This is the key thing with Schwab. What are we doing? Not what we're talking about, but Kathy Jones, what are Schwab high net worth individuals doing with their money?
Well, they're enjoying the ride right now because things have gone pretty well. In terms of fixed income, what we're saying is people are looking at some of these yields and saying, for that part of my portfolio, I like 5% plus, whether it's investment grade corporate bonds or, tax adjusted muni bonds, even treasuries are giving you a pretty decent yield. We're seeing a little bit of caution just because we don't know how far the Fed will go. But I do think people are looking at these yields and saying, okay, I'm a little more assured that these yields are, near the upper end of where we're going to be. So they're moving out a little bit on the curve.
So, Kathy, I can't help but notice. I look at my I-N-GO function, kind of gives you the returns for across fixed income. And boy, the high yield and leverage loan spaces, high 8%, 9% returns year to date. I'm surprised that that part of the market's been so strong. How do you think about that part of the market these days?
Yeah, you've had really easy financing conditions. You've had rates coming down. Obviously, that's a tailwind. Have high coupons. That's a tailwind. And then what you've had in a lot of this is the private credit folks taking out the weaker players in the high yield market. So high yield market has changed, is evolving to be less junky than it has been in the past. And we've had a good economic environment and corporate earnings going up. So it's been a pretty good backdrop for riskier parts of the fixed income market, as it has been for the equity market. High yield tends to be highly correlated with equities, so not too surprising there.
All right, so I guess the question is here for 2025, given the strong returns across fixed income, again, green pretty much across most of the spaces here, where is there value in 2025 as you kind of think about the global fixed income space?
Yeah, I wouldn't say anything is a screaming, undervaluation at this stage of the game. Everything's pretty fairly valued, and you could argue that in some parts of the market, like corporate bonds, valuations are pretty rich because the yield spread versus treasuries are really, really tight. And I would say that that's true in high yield. You'd have to be sort of cautious there because everything's fine until it isn't in high yield, and then the spreads move. But we're also just focusing on the all-in yield, and buyers in fixed income usually buy for the income, and it's a pretty attractive level here. So I would just be cautious about going too far out the risk spectrum, particularly in high yield, but in general, the backdrop is still positive.
Kathy, thank you so much. Too short a visit. Let's do it longer next time. Kathy Jones with us of Charles Schwab to finish up this very strong hour. Again, commercial free to give you the best of conversation on this jobs day. There's a Whit Stillman movie. The Whit Stillman, of course, they're doing a whole thing on Metropolitan now. I can't remember that. I can't remember which movie theater, but they're doing a look back at how Metropolitan changed so much, thinking about the Upper East Side. There's a Whit Stillman movie where they feature the Old Town Bar. We had reporting last night, team coverage at the Old Town Bar. Did you go up the wooden stairs?
We did. We had the...
They're like original.
The original. It was great at the Old Town Bar. It's a classic New York City watering hole. Had some of my high school buddies getting together. Had a good time. But it was, Tom, no surprise, it was packed. You couldn't walk from the front of the bar to the back. That's how packed it was.
So many of you across the nation, I hear this all the time, like we're not hearing it. And I go to two Americas, and you, Paul, were way out front of this versus me. Like James Gorman at Morgan Stanley, he said the restaurants are packed, come back to work.
Yeah, exactly.
And the answer is it's crazy out there.
It is, and the young people are out and about and having a good time on a Thursday night here. And so the city is alive and well. They had the tree lighting earlier in the week.
Yeah.
The tourists are here
Lisa,
all across the board.
Paul's rolling The $85 steak at the Old Town Bar. I mean, the fancy hamburger there is like $45 now. What am I doing last night?
What?
I'm at Katz's Delicatessen in Soho.
That's good stuff, though.
It's great. It's packed.
Yes.
Just like it was a different packed, but it was packed.
Yeah, it's good. So again, good to see our good friends all around the city out and about here in this holiday season.
What are we doing? We're doing Chris Hillman. He's 80 years old. Chris Hillman, The Birds with Jim McGuinn. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr in after Legal's Lions Packers last night.
Big
I
win.
thought maybe it'd be day off for Mr. Barr.
Yeah, I thought he would have had, the ownership would have given him a day off maybe.
Jobs Day with the market lift with a little bit red on the screen and now a little bit green on the screen. Critically, the VIX is going to give me a 12 level, 13.08 in this great bull market on the VIX. We had a positive revision. A 200 number, nice big lofty number on payrolls, came out to an all-in, I'm going to just quick, Jason Furman will do this better, at Harvard, but like 280,000 with the revision. It was a little more than that, but there we go. Great analysis in the last hour. We're going to drive that forward here. Stephanie Roth joining us here in a moment from Wolfe Research. And Paul, to Lori Calvasina's point, it is about this great bull market. Did you notice the exuberance of this great bull market as you were out and about last night?
I certainly did. Again, the streets are packed. It was chilly last night in the city. Good to see a little winter weather coming this way.
Yeah.
But again, folks are out and about, and again, it's great to see the young people out doing their thing.
Listen to you, the young people.
The young folks out there, so it's good. Hey, Tom, your VIX is sitting right at 13 here. I mean, the market feels like it's
13.05.
Yeah. Humming
a
right
lower
along
VIX statistic is a more quiescent market,
yes,
as Chairman Greenspan would say. Speaking of Chairman, the Vice Chairman will be with us. Alan Blinder scheduled at 9:30. Got a redux with Ira Jersey today. We had such a huge response from Soccer Talk with Aston Villa yesterday. Is it Villa or Villa?
I'm going Villa.
Aston Villa?
I'm going Villa.
Thank you, Ari. Aston
Ari
Villa.
knows what he's doing.
Bob's like, what is that? It's not baseball. We're on the Juan Soto watch as well, I should mention. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, we've got stocks advancing. This is after the U.S. job market rebounded in November. Solid advance in payrolls, increasing 227,000. That followed that upwardly revised 36,000 gain in October. Wages rose more than expected. Unemployment rate edged higher. So we have NASDAQ futures up 32 points. Dow futures up 71, and we have S&P futures up 8. The two-year yield, 4.08%, down 6 basis points. The yield on the 10-year, 4.15%, and that's down 3 basis points. Taking a global look because of the news flow in France and South Korea, we'll start with the CAC in Paris right now. That is up more than 1.5%. The euro, little changed at 105.94 against the dollar. The Bloomberg Dollar Spot Index is little changed. We go to the Korean won. That is down about 0.1%. And pointing out the Kospi, it's down about 0.5%. Bitcoin pulling back from that record high. It's now just above 98,000. We have shares of Lululemon up 8%. The company boosted its full-year outlook. Victoria's Secret, they also raised their outlook. Shoppers had an early positive response. They liked the holiday merchandise. Shares up 3%. And Ulta Beauty reported better than expected results. Its shares are up 9%. I got to tell you, my whole family was at Victoria's Secret when we went to the outlets over in Jersey Shore. So
too much information.
So it's okay.
Are you done?
But the Victoria's Secret store across the street is gone.
It's gone, yeah.
It's gone, okay.
I know.
Right.
But it's still at the outlets. That
Still
is your
at the
Bloomberg Business Flash and Victoria's Secret update.
Have some more Tito's mimosas. I think that'll get us through the hour. Lisa Mateo there. Too much information there from Lisa Mateo. Our economics in that hour you just heard of America's Jobs Report. It's brought to you by Commonwealth Join. Over 2,000 independent financial advisors. They are taking control of their growth. With advisor-centric support, future-ready technologies, grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. And we thank Commonwealth for really heritage economic support here at Bloomberg Surveillance. We were going to do the equity markets here, and I'm like, do something, retail.
Yep.
Victoria's Secret. No, we're not going to do that. We're going to continue here on the trend. Stephanie Roth brings a huge acuity into her analysis, and I really want to talk to her about the veracity of the data now and the certitude for it. Stephanie Roth is chief economist at Wolfe Research. I don't want to know what the chi-squared is, Stephanie, but when you look at an Excel spreadsheet forward, do you have faith in the economic data, or are you just guessing?
Yeah, I think we have faith in it. But it's fair. There's been a lot of revisions. There's been a lot of noise. The hurricanes haven't helped. But when you look at trends, when you look at a breadth of data, what we're seeing is a labor market that has slowed but still remains pretty firm. And honestly, today seemed like sort of a Goldilocks type of conclusion, and I think that's fair.
So, Stephanie, how do you think the Federal Reserve, as we get ready for the December 18th meeting, how do you think the Fed's going to look at this data?
This is almost certainly gonna make the case for a cut in December. And the markets are telling you that. The odds of a cut at the FOMC have gone up to nearly 90% on the back of this print from 70%. And that's totally fair. Now, next week's inflation print is significantly less important. In order for the Fed to not cut in December, you probably needed both payrolls and inflation to come in hot. Because payrolls didn't, now the onus is less on inflation, and they're probably going to just do the cut in December, and now it's going to be about how it's messaged, and the inflation print will be important for that part.
So, again, as we step back here, we see a wage number that seems pretty darn solid here. Is it too solid? I'm looking at year-over-year average hourly earnings, 4%. That seems pretty solid. Is that a good number? Is it too hot? How do you view the wage number?
4% is okay, and here's why. So typically they would have looked for a 3.5% wage number because the way they think about it, they take the wage inflation minus the assumed productivity number, and that gets you to what the actual implication is for inflation in the economy. So generally speaking, if we go back to last cycle's productivity of 1.5%, you take 3.5% wage inflation minus 1.5% equals 2% core inflation, which gets you to their target. But productivity has started to pick up now. So being that we're seeing signs of productivity running close to 2%, perhaps now 4% is totally tolerable. 4% minus 2% equals now your 2%. So it's very possible the Fed will kind of be okay with this type of wage backdrop because there's no signs that the labor market is overheating.
Stephanie, did you get the memo that we're math-free on Friday?
Exactly. Well, she gets a master's in statistics from. Who gets a master's in statistics?
Do you know what her grand bank? She's got a 54-foot grand banks. Do you know what it's called?
What?
1 over the square root of n. 1 over the square root of n. Watch out for 1 over the square root of n. Stephanie Roth, with that said, and with the math, it again comes down to, in productivity sense, the technology overlay. Let's go all Dale Jorgensen, the Nobel laureate of Harvard. Is this so diffuse now and so original that we have really no idea until 3 years or 5 years from now what our efficiency is in the end of 2024?
It's fair. The productivity data are very, very volatile. People look at them on a 3 or 5 year average. So it's fair to say, what's really happening under the surface, and do we have to look several years in the future to be able to figure out what's happening today? But what we can say is GDP growth has been running at around 3%, and the trend in payrolls has been okay. And the square to that circle is that productivity has been solid. So whether it's 1.7% or 1.9% or even 2%, it doesn't really matter.
Stephanie, thank you so much. After this Jobs Day, Stephanie Roth joins us, chief economist, Wolfe Research. She'll be back on a Wednesday when we do calculus as well. And I can't say enough about the live chat. Just subscribe to Bloomberg Podcast. Pick us up each morning. And here's a gentleman. This is the smartest single thing, Paul. I'm going to Paul Sweeney on this.
Uh-oh.
Suggestion for surveillance crew and each equity guest. Which stock should every grandparent buy 10,000 of for their grandchild?
Good question. I like
Which stock? This is our heritage question. JFG, you're killing it.
Thank you.
That's our heritage question for 2000. Which stock, Paul?
Oh, my God. I mean, do you just play the NVIDIA, or is that played out? Or do you buy Disney? Go Americana?
I don't know. Heritage, you're going to go Disney.
Probably.
She's just all Moana on the brain.
Exactly. So it's good stuff. I bet that's a great question. I mean, you 27% return in the S&P 500, Tom. Now what do you do for 2025?
Okay, my answer is everyone I know except John Tucker has a new iPhone. First of all, we don't recommend stocks. Let's be clear here. But how can you bet against Apple? Just sometime on the street, look at what everyone's doing. They're all looking at their phone.
Yes, and running into me, by the way, on not looking.
Yeah, and running into you as well. I just got my new phone bill with 3 new iPhones on it. It's like a mortgage.
It's a mortgage payment. Ago. I know.
That's our question for next year. Which stock for the cherubs? $10,000 for the grandchild. Great question. Futures advance up 9. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President-elect Donald Trump says his defense secretary nominee, Pete Hegseth, is doing very well. Trump called his support for Hegseth strong and deep. On Truth Social, Trump says Pete is a winner, and there is nothing that can be done to change that. Hegseth faces allegations of abusing alcohol, among others. On Capitol Hill Thursday, Hegseth told reporters he's a changed man.
I'm a different man than I was years ago. And that's a redemption story that I think a lot of Americans appreciate.
Meanwhile, Elon Musk and Vivek Ramaswamy also stopped by Capitol Hill, tapped to lead Trump's newly created Department of Government Efficiency, promising to cut trillions of dollars from federal agencies and programs. The billionaires met with House Speaker Mike Johnson. It got heated on Capitol Hill as Congress investigates the Trump rally shooting in July. While answering questions about other controversies involving the Secret Service, Acting Director Ronald Rowe and Republican Texas Congressman Pat Fallon got into it over Rowe's attendance at the 9/11 memorial in New York this past September. The congressman accused Rowe of putting the president's Secret Service detail out of position so he could sit behind President Biden, potentially endangering the life of now President-elect Trump and Vice President Harris, who were sitting nearby.
Do not invoke 9/11 for political purposes.
Oh, I'm not. I'm invoking this.
You are, sir.
Gentlemen,
and you are out of line.
I would like to ask him a question. Please.
You are out of line,
Congressman. Don't try to bully me.
Order.
Rowe said that he was at the memorial to represent the Secret Service and said his presence did not affect protective operations. Finally, a couple of football notes. North Carolina has interviewed former New England Patriots coach and 6-time Super Bowl champion Bill Belichick for its head coaching position. And in Thursday Night Football, I didn't hear this. The Lions, they beat the Packers 34-31 on a last-second play. Oh,
11-1.
Man.
Is your shirt, it's kind of
12-1.
Detroit 12-1. 12-1. Detroit line kind of bluish. I'm kind of going.
No, that's sort of, that's his Dolphin shirt.
Okay.
It was. But I came very close because the Barry Sanders shirt was hanging right next to
okay.
this.
Okay. All right.
So I might have to come into that next Friday.
Good. Go.
In 2 minutes, I believe we're going to go to a moment of silence for a guy. Can you help me, Bob? You're 7 minutes. Thank you. In 7 minutes, we're going to go to a moment of silence for a kid. When you're 17 years old and your father dies, you go get a job.
Yep.
Long time ago. Beginning at Thompson McKinnon.
Great firm.
At the end of the Eisenhower administration government. Art Cashin. Who is that, Paul Sweeney?
He was the equity strategist for Payne Weber and now UBS. I started at Payne Weber June 16th, 1986 in the equity research department. He was a legend then, Tom. He wrote his Cashin's comments. They printed them on yellow paper. So when you had a million research reports sitting on your desk in the morning, the yellow paper would stand out and you'd read that. But everybody read Cashin's comments.
He invented the way we communicate on modern Wall Street. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Futures Report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group Futures across equity indices, interest rates, FX, energy, and more. Access CME Futures around the clock at Interactive Brokers. All right, we've got stocks advancing after U.S. payrolls rebounded from storm strikes, increasing 227,000 last month. Right now we have NASDAQ Futures up 29 points, Dow Futures up 74, S&P Futures up 8. The two-year yield 4.08%, down 6 basis points. The yield on the 10-year 4.14%, and that's down 3 basis points. Stocks on the move. Petco up 22% now. Reported third quarter adjusted EBITDA came in ahead of estimates. DocuSign up more than 14%, boosted revenue forecast for the full year. And finally, shares of Smith & Wesson down 15%. Second quarter adjusted earnings per share missed those estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. I can't say enough, folks, about how there was a time before financial radio, financial media, financial TV. In my case, I got the stock report with my mother at 4:20 or 4:30 from Morton Nussbaum, and they started with Anaconda Copper and the rest of it. Paul, the importance of Art Cashin in a comments memo 5 days a week in yellow on your desk at Payne Weber.
Every single day you came into work and it was on your desk. They made sure
you came into work in a vacuum.
Yes, and they made sure every young person had this on their desk when they came in to really get an understanding of what Cashin's comments were about, what happened in the market yesterday from a trader's perspective, and what he was expecting to happen in the market today. And this was before, Tom, as you mentioned, there are 27,000 different sources of market commentary. There was a handful of people doing this on a regular basis and doing it well. Art was the leader, and he wrote in such a folksy, fun, interesting manner that you read. It was two pages, back to back, and single space, and you read every word. There was no headings, no titles. You just read every word, and that's
part of the
way
apps that we do, folks. I mean, you have just no idea how dour I am and serious. You can't do this without a respect to the humor
right.
of Art Cashin. To me, it was Al Goldman at A.G. Edwards years ago. But you can't go through this wicked serious. And Art balanced that it was a business and it was serious, but at the same time, he wanted to go look at marinated ice cubes.
Exactly. And exactly right. And Tom, and he was on the New York Stock Exchange floor. That was his office. So generations of traders on the New York Stock Exchange floor knew and respected Art Cashin from his days at Paine Webber. And then when UBS acquired Paine Webber, UBS, and just the absolute dean of the New York Stock Exchange floor.
And Bob Pisani up there helping out,
Bob's
ringing
fantastic.
the bell. I can't say enough about, the invention of this. Bob Pisani and frankly Maria took that energy of the morning analysis and brought it over. And, I think that with Mark Haynes and others at Bloomberg as well. Dylan Radigan, a name there from many years ago. Art Cashin, he has died in his 80s, a terrific example of the day-to-day grind of Wall Street, of doing it right with class. This is Bloomberg Surveillance from Art Cashin's New York City, and we say good morning.
All right, that's a moment of silence for Art Cashin, dean really of the New York Stock Exchange floor, Tom. Many, many years, starting at Paine Webber and then through UBS. Just really the voice of the equity markets for, many, many investors out there over generations. Tom.
Two ideas. Somebody mentioned Alan Abelson yesterday, and we were weaned on Alan Abelson. I still sit, thank you so much to Barron's, their Federal Reserve team. They were laughing at me in Jackson Hole saying, Tom, you got to get a print copy of Barron's and sit at the Saturday table with your black cup of coffee and turn the pages of Barron's. I'm still doing it, folks. One of my earliest memories, it goes back, is my grandfather, who was at the time in Chicago in that trading pit that's at the back of the Art Institute of Chicago. And Grandpa used to take me on Saturdays to the floor. Everyone's smoking cigars. And there were the spittoons and that. And you brought that forward to how we modernize this, and we did it with Art Cashin. I mean, the communication. When did you get his note? It wasn't at 6 a.m.
No, as youngsters, we get in. It was there by 7. It was there by 7:30. And again, he did this every single day, and he didn't have a team either. It was just Art Cashin just kind of riffing on what he thought about the markets, and that's what people really wanted.
And we do that to what Matt Winkler invented, which is the headlines of the Bloomberg Professional Service. Really can't say enough about where we are, how we digest this now, how we're wedded to our cell phones. I come in the morning, Sweeney's glued to his cell phone, picking up the news. Every time I look, you got Duke basketball up. You're not.
No, exactly. Getting the highlights. They actually won a big game, so good for them. We'll see.
Should we go back to Belichick and UNC? What do you think of that?
I don't know. That came out of nowhere. I can't imagine he'd want to go to the pros. I mean, into the college ranks. Wow. I can't imagine.
It's amazing. We had such a response yesterday to Ira Jersey being with us. People talking about $33,000 a ticket for the World Cup. We thought we'd drag them back here to actually talk about the bond market and signals from our Fed. Ira Jersey joins us, driving all of our interest rate strategy here. Ira, fold your study of interest rates into the exuberance and effervescence of this solid economy. Are we exuberant?
Well, I don't think we're that exuberant, and certainly the bond market didn't take the jobs data as particularly exuberant. It was close to expectations, and certainly it doesn't seem like the labor market is very concerning. And I'll point something out, Tom, that I think is one of those little known, really deep in the weeds numbers that you get. The number of job leavers was up. The number of people who joined the labor force was up. The number of people who re-entered the labor force was up. The only thing that was unchanged in terms of the number of people unemployed was people who lost their jobs. So basically, in this report, very few people were actually lost their jobs, and the reason why the unemployment rate rose was actually for what's generally considered good reasons, and that's that people are trying to get jobs and they've entered or re-entered the workforce. So I think you could take this actually as a better report maybe than the market is actually taking it for, and that's so I suspect that that's one reason why you haven't seen a 10 basis point rally in 2-year Treasury yields. You've only seen it's a decent rally, but it's not crazy.
So what are your friends at the U.S. Federal Reserve? How are they viewing this report this morning?
Yeah, I think this is given that it's as expected, and you could point to some things like, for example, the number of unemployed people changing the way it did, and the unemployment rate going up. All of those things will probably give enough comfort to the Fed that they can actually cut rates. Now, do they need to cut rates? Probably not. And what you see in the market right now is after this December cut, the market is now pricing for a skip of January, then a cut in March, then a skip of May, and then a cut in either June or July. So you have the market actually now pricing for a slower decline in the Fed funds rate than it had certainly 3 months ago when we were expecting cuts all the way down through the end of 2025.
Ira, we got to interrupt the show here. We got to do this right now. This is on YouTube Live Chat. Paul looks so young for starting in 1986. Ira, do you age quicker in the bond market versus the equity market?
Well, I don't know. Someone complimented me yesterday at the Bloomberg Credit Conference that I was on a panel with some other people. They say you look exactly the same as you did 20 years ago. So I'd like to think not.
Okay.
But at the same time, I think to your point, Tom, the bond market can definitely give you some agita, right? Where you wound up, just because the volatility is crazy, you get these numbers, and all of a sudden sentiment shifts massively for almost no reason.
Ira, we got to run. Too short a visit. Thank you so much. We need to get the markets open. Stay with us on YouTube, Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with a new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, all eyes have been on the final payrolls report before the Fed's next interest rate decision. It was a solid advance in November, increasing 227,000. Let's see how the markets are going to react as we get things started on this last trading day of the week. S&P 500 up about 0.1%, 9 points at 6,084. The Dow up 0.2%, 112 points, 44,871. The Nasdaq up 0.2%, 44 points at 19,746. The 2-year yield 4.08%. That's down 6 basis points. The yield on the 10-year 4.13%. That's down 4 basis points. We have Brent crude at $71 a barrel, down nearly 1%. WTI crude at $67 a barrel. Spot gold lower at $2,629 an ounce. The Bloomberg Dollar Spot Index is little change. That is your Bloomberg opening bell report. Tom and Paul.
Thank you so much, Lisa. Greatly appreciate it. I want to go through the path here because I think it's important. If you're a kid in Brooklyn, and this is a few years back, and you're uncommonly brilliant, you just end up at Princeton University, and you do better than good, and there's a thing called summa cum laude. This is a few years ago. And then you wander through to the London School of Economics, and then you have the privilege of being advised at MIT by the giant of economic growth, Robert Solow. That is the path of Alan Blinder, the former vice chairman, joins us now. Honored that he could be with us today. Alan Blinder, what was the first day with Robert Solow like? What the intimidation factor of dealing with the giant of growth? What was that like at MIT?
It was a little bit odd because my first day with him was actually not in macroeconomics. He was teaching what they then called at MIT advanced economic theory. And he had got a bug in his head that what he should be doing is making urban economics more mathematical. So we started off with lectures on cities whose optimal shape was the same as a cigar. And he joked that that was a model of Palo Alto. I still remember that.
Alan Blinder, do we have too much math now? Do you detect a model at the Eccles building post-pandemic, or are we making it up as we go?
I don't think so. Not in that building. Now, you might level that criticism at parts of academia, though. I think even there, that peaked or troughed, whatever you want to call it, a little while back. And economics is getting a bit more empirical again, which to me is a good thing. Not that we should jettison economic theory. It's a question of how big a slice of the pie economic theory should take compared to empirical economics. So I think that's improving. And inside the Fed, you don't see a lot of this highfalutin theory, let's call it. They have to be, by the nature of their jobs, more down to earth.
Professor, you recently had a piece in the Wall Street Journal talking about President-elect Trump's economic plan. There are concerns about some of the inflationary aspects to this plan, whether it's tariffs or cutting taxes. Can you give us your sense of kind of what we know now?
Yeah, well, we don't know anything now. I think we can make the best guess about tariffs because the president-elect has actually talked about numbers. And even though some of those numbers sound wild high compared to any sensible economic policy, we have come to learn from President-elect Trump's first term that maybe we should believe him. That just because he talks about 60% tariffs and most economists would say that's completely crazy, we shouldn't dismiss the fact that he might do that. And he has, I think it was a huge mistake that Congress made, though you understand why. He has unilateral authority over that. You would think this is weird. The Constitution gives taxing authority, and that's what tariffs are, to the Congress. But the Congress has delegated that all the president has to do is say to some kind of national emergency, which, of course, to Trump, there's three national emergencies every day. So he could actually do that. So you have some handle on the numbers. On the mass incarceration and deportation promises, I don't think he'll ever get 11 million. What he'll get in the first year or so, I have no idea. It depends on how draconian and thorough they are. You can imagine pretty horrible scenarios there, but it's really guesswork.
Alan Blinder, I look at Republican, and of course your support of John Kerry and Al Gore and others puts you on the left side of the debate, but I look at the nuances of the conservative debate on economics, and I see someone acutely responsible like Glenn Hubbard at Columbia University, and then I see others within the milieu, including with President-elect Trump, who are basically saying growth at any cost. What's the price of a growth at any cost strategy?
Well, I think there are several possible prices. First of all, in pursuit of a will-o'-the-wisp, you may do silly or crazy things. That's the first thing you worry about. Like, for example, just to give you one example, we're on Bloomberg after all. massive repeal of banking regulation. Sure, let's go back to 2007 or something like that. So there's that kind of a possible cost. And then the more obvious cost is the inflationary impact. If you just go full throttle on aggregate demand, for example, cutting taxes again on top, extending the previous Trump tax cuts and then cutting taxes again, you can start running into an inflationary problem unless, and this is the other big deal, the Fed steps in and stops it, and the president doesn't step in and stop the Fed somehow.
Professor, we had a pretty decent labor print here today, non-farm payroll. It seems like this labor economy, it just kind of continues month after month after month to kind of amaze a lot of investors here. How do you view the U.S. labor market?
As you asked the question, I'm smiling. I think it's great. It's beyond what any of us, I think, would have imagined. Beyond in a good sense, what any of us could have imagined a year and a half ago or something like that. I look at this number that just came out as hitting par. Again, when I say hitting par, remember what the previous month was severely impacted by the strike and the storms. And so the jobs number was tiny. If you average the last month and this month now on the current BLS measurements, you're right on par. You're like at 130,000 a month. And this is not far from where we've been for a long time. And the unemployment rate's been close to 4.1, 4.2, 4, 3.9 for a very long time. I mean, this is fabulous. This really is.
Alan Blinder, my good friend Adam Johnson, holding court over at Fox Biz with Maria. Adam's watching. He sends in a note. Can you ask Professor Blinder if there's going to be a 15th edition of your textbook? Where are we on Balma Blinder solo? I mean, are we going to get a new edition?
I can't answer that. We're on the 14th now, and there won't be a 15th edition. It's time to retire it. For your information, though you didn't ask this, it's implicit in the question. The first edition was published, wait for it, in 1979. It's been a long run. Talk about things that weren't expected. If you'd asked me in 1979, how long do you think this textbook will last? I don't know what I would have said, but it wouldn't have been the 14 editions.
One final question to the former vice chairman. Again, you've been associated with Democratic Party politics. How does the Democratic Party get back to the center of Scoop Jackson, the center of HHH? How do we get back there?
You know, I think a lot of this is perception and some of it is policy. And of course, we're not going to be able to do much policy while we're in the minority. The perception and the policy are about the caring about and doing something for, let's just call it middle to lower middle class working people. It's ironic to me that the Democrats against the Republicans go back generations. There's never been a question of which was the party that cared more about ordinary working people. Never. Until now. And now there is. And the Republicans, in particular Donald Trump, have captured a lot of that support and vote. I think that those people are going to see what the second Trump administration collection of billionaires actually does with the policy levers and not be too happy. Certainly not believe that it was for them.
Alan Blinder, thank you so much. The former vice chairman of the Federal Reserve System, of course, definitive at Princeton University. On this jobs day with an equity market lift, the Dow up 0.3%, but up 120 points, Paul. It's not like it was in 1979.
No, it was not.
It's a little different. Now, I don't have a 45,000 print in the Dow. We'll get there. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, President-elect Donald Trump says his pick to be defense secretary is doing very well. Trump on Truth Social called Pete Hegseth a winner, and his support is strong and deep. Hegseth faces allegations of sexual misconduct, alcohol abuse, and mismanagement of veterans organizations. Meanwhile, Senate Republican Joni Ernst, a combat veteran and rape survivor, influential with GOP colleagues on military matters, pointedly declined to support Hexit.
I think for a number of our senators, they want to make sure that any allegations have been cleared, and that's why we have to have a very thorough vetting process.
So far, just 2 of the 9 female Republican senators are on Hexit's side. Police appear to be closing in on the identity of the man suspected of gunning down United Healthcare CEO Brian Thompson in Manhattan on Wednesday morning. The NYPD released clear images of the suspect, hoping that it will lead to an identification. According to several reports, the suspect arrived in New York November 24th on a bus that originated in Atlanta. NASA says that the schedule for returning an American to the moon has been pushed back. NASA Administrator Bill Nelson says the Orion crew capsule needs safety enhancements before astronauts can climb on board.
We need to get this test flight right to ensure the success of our return to the moon and return safely to Earth.
A previous uncrewed test of the Orion capsule found excessive damage to heat shields meant to protect the people who will be on board. The planned launch of Artemis 3 is now set for mid-2027. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Greatly. I appreciate this well. I look at where we are into the weekend, and I got a problem.
Yep.
I got a beverage of my choice in my hands, and I'm trying to tune into Lions-Packers, and it's not on real TV.
Oh, don't go there.
Are we really there with streaming to me? I mean, they got the giant. Al Michaels is on doing a game. But it took me forever to figure out.
Prime? There you go. Yep. Yeah,
it was on Amazon Prime.
Yeah.
Well, this gray-haired man over here finally decided, you know what, I got to get it. I did.
Paul, that's what's going to happen.
Yep. And it's a lot of folks, you can't find it. I mean, a lot of folks have trouble finding some of these games, and it's true with not just the national games like the NFL, but local Yankee games on Thursday nights are often on Prime.
Nuts. Absolutely drives me nuts.
Well, unfortunately, this is the new world order.
Next fall, starting, into the season and all that, it's going to get worse. It's going to report.
Absolutely, every year for the next several years, and to ultimately, it's all going to be on streaming, I think.
I've already bought the NFL Sunday ticket.
Did you buy that?
Yes, I did.
That's a lot of money.
But boy, is it worth it. Because I can watch different games. I mean, it's a piece of work. I'm sorry. I'm not pitching it, but boy, it is good.
Michael Barr, we went to the moon for this.
Yes.
I mean, we went to the moon so we could get, what's it called, NFL Sunday something?
Sunday ticket,
yeah.
Sunday ticket, yeah.
Lisa, they don't sell this at Costco. Did you see what that thing costs?
No, but my husband asked, and we are not getting that.
Yeah, exactly. Michael Barr mortgaged a child to get it. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We have stocks advancing, and this is after a solid advance in payrolls helped lessen those concerns of a worsening slowdown in the labor market, increasing 227,000 last month. We are on records watch, so let's get right to it. We'll start with the NASDAQ up 0.5%, 107 points at 19,808. The Dow up 0.1%, 79 points at 44,843. The S&P 500 up 0.3%, 19 points at 6,094. We have the two-year yield at 4.09%. That's down 5 basis points. The yield on the 10-year, 4.14%. That's down 3 basis points. Taking a global look because of the news flow, France and South Korea, the CAC in Paris right now, that is up about 1%. We have the euro, little change right now at 105.81 against the dollar. The Bloomberg Dollar Spot Index is little changed. And we have the Korean won down about 0.3%, and the Kospi down about 0.5%. Bitcoin right now, have to point it out, is still lower at just over 98,000. Stocks we're keeping an eye on. Shares of Lululemon, they're up 16%. The company boosted its full-year outlook. Then you have Ulta Beauty, that's up 13%, better than expected results in the most recent quarter. And finally, shares of Petco up 17%. And that report, after its reported third quarter adjusted EBITDA, came in just ahead of estimates. And finally, thanks to everyone on the live chat showing their love to Paul Sweeney on his birthday. Paul Sweeney,
boom.
You are getting all the love today.
Thank you very
Happy
much.
birthday. Enjoy.
Yeah, exactly. Another trip around the sun. How about that?
Good.
Still here.
Good plans?
Oh, yeah. All good. It's a weekend thing.
You've been, it's like a week celebration.
Yeah,
for
exactly. And you get this far.
Well, you went to Broadway last night.
Saw, a wonderful...
Louis Armstrong.
Yeah, a wonderful world. Louis Armstrong story. Great show. Incredibly talented cast. They can all sing and dance and act. They do it all. It's just amazing. So,
Hey, Lisa, can we have his social life?
I'm telling you, I'm a loser.
And so am I. Tiffany Wilding is not a loser with a top 100 points. We're going to sum this up. She's got one of the toughest jobs in Wall Street, which is out on the left coast with PIMCO, to advise bond animals about the economy. Tiffany Wild, what will you speak to Jerome Schneider and the others today about the state of the American economy?
Yeah, I mean, I think overall the U.S. economy is doing quite well. You look at growth. We are still well above what we thought was the trend of around 2%. And when you look at the labor market, I think the signals there have been more mixed. But overall, it looks like labor markets are potentially reaccelerating a little bit, at least on the payroll survey. You are seeing a little bit of a tick up in the unemployment rate, but we've had a pretty significant labor supply boom over the last several years. So, I think all of that puts the U.S. economy in a really strong place going into next year.
Let me steal some thunder from Paul. He's always circling back to risk and bonds, which is high yield. And I know PIMCO's really not, that's not your focus. But with spreads this tight, I mean, is the PIMCO world priced to perfection because of this solid economy?
Yeah, well, I mean, the point that we've just really been emphasizing is that just given the level of government bond yields, safe assets right now, prime securities, you don't really have to reach for yield. Go out and increase your risk to pick up yield. It's actually the opposite. You can look at a core bond portfolio now, which includes some securitized, highly rated securitized credit, and you can make something that is 5 to 6% yielding. If you can do that, why would you want to to go into the high yield parts of the bond market, where valuations are very tight? We would even argue equity valuations look pretty tight. So I actually think it's a pretty good environment here for the bond market.
So we get a change in non-farm payrolls today, Tiffany, of 227,000. Solid number, solid revisions. How do you think the Federal Reserve is going to, internalize that kind of data as they think about their meeting on the 18th?
Yeah, well, I mean, so we've been leaning towards them doing another 25 basis point cut in December, but pairing that with upward revisions to their own forecasts. And that's just because the economy is looking pretty strong. It's looking stronger than they thought in September. So we think the unemployment rate forecast that they had, that will probably come down. They'll have to revise up growth. They might revise up inflation a little bit. And all of that means is that the end of the year 2025 Fed funds rate forecast will also probably be revised up. We think 3.8 is pretty reasonable versus 3.3, so you get a 50 basis point revision. So we think, even though they've done a series of cuts, and we think that continues with another one in December, they're going to set us up for clearly signaling a slowdown, in the pace of cuts in 2025.
Tiffany, it's literally been a month since the U.S. presidential election. When you got together with your portfolio management team and the days after, did you guys change or reallocate kind of your outlook for the marketplace?
Yeah, I think it's an ongoing question. Obviously, with every election, the devil will always be in the policy details. And, I think we're kind of getting some more policy details that are trickling out post-election, and we'll ultimately get more. But, if you just take a step back, I think the thing that we would really emphasize is that, the U.S. economy actually does look pretty strong. And if you compare the U.S. economy versus other economies around the world, we have recovered more fully. Our productivity has been better. Yes, inflation and price levels are 20 to 30% higher, but that's similar in other countries, and we've been able to grow more and at a more productive environment. So the U.S. economy actually compared to others doesn't need, I would argue it's in the least amount of change that's needed. Nevertheless, though, certainly there are policy changes that are going to be made. Tariffs and potential government spending cuts is something that's a big focus, and we'll have to see how the details on that play out.
I look, Tiffany, we're hearing this from a lot of people, a solid economy. So, okay, so where's the black swan out there? I don't mean doom and gloom. Taleb would say forget about the doom and gloom, but where's the Tiffany Wilding worry?
I think the U.S. looks pretty good, but everywhere else around the world, has been, what I would call mediocre. And so, when you're kind of in that mediocre environment, there's a question about really what is going to be the growth engines of tomorrow. We're in an environment now where you just have more volatile, a geopolitical environment. So supply side shocks, additional supply side shocks could be just around the corner as you have flare-ups. All of that, could impact economies. So, those are the kind of things, the things that are difficult to forecast, that I think we're always on the lookout for. And overall, our secular view is that you're just going to have more volatile outcomes, across the globe. And that's something that you just have to prepare for. And we think active management, by the way, is a great way to think about that.
Tiffany, thank you so much. Tiffany Wilding with us, chief economist at PIMCO, Newport Beach.
Nice.
That is tough. I've never been. Have you been?
I have been.
No, I have been.
Spectacular.
I stand corrected.
Okay. Yep.
Mohammed and Bill had me out once.
Yep.
I behaved myself.
Yeah. I go out. I've been out there. My number 3 offspring is now doing his financial services thing out there in Burbank, which seems pretty cool. I got to go out and check that out. Cool. But it's it's a great part of the world there. That's why people will deal with the earthquakes and the mudslides and all the craziness.
Michigan data here at 10 o'clock.
Yep,
Paul
we'll have
Sweeney,
that.
Alex, they're going to have that for you. They'll do Bitcoin under 100,000, I think is where we are. Yeah, 99,000. We're going to buttress up right against it again. We've had fun today with Chris Hillman. Huge response. Thank you, particularly out on YouTube. I can't say enough about a 20-year-old. When the song 8 Miles High came out, he was the wonder child of the Byrds. And then on and on. Now, Chris Hillman, at 80 years old, one of the giant careers of creative enterprise across all of music in America. He bumped into a guy named Stephen Stills further down the road, and they did an album that was a jewel. Bill Wyman of the Rolling Stones almost joined Manassas.
Right?
That was, I remember the buzz was just like, the movie Almost Famous?
Mm-hmm.
They were living it. It was like in real time. And the heart and soul of that, of course, was Stephen Stills. And he said to Chris Hillman, we need a song. Please, we need a song. We need a song. And Chris Hillman is always delivered. See you next week. Paul Sweeney next.
Every tomorrow